Welcome to the first virtual BURSA Marketplace Fair. We are glad to have you here. Please watch this short walkthrough video on how to navigate the virtual platform. You are now in the virtual event lobby, where you can navigate to any part of the event. Here, we have our virtual exhibition hall with a lineup of all our exhibitors. This is our agenda for the day. Be sure to attend the sessions you're interested in. Our conference hall pages where you can navigate across pages or ask questions. Our speaker page with the lineup of all our distinguished speakers. Our event survey page. Be sure to fill this up during or after the event. And here is our giveaway room, where you will be able to win amazing prizes through the giveaway and tournament. For the giveaway, just complete 2 mandatory tasks and a combination of 2 of the additional tasks to stand a chance to win. For the tournament, participate in all the 7 quizzes and stand a chance of winning 500 ringgit, 300 ringgit, or 200 ringgit. Let's return back to the exhibitors. Here, you can chat, video call, or meet up with our exhibitors. Below, you will find all the relevant information from about to contact details and their wide range of resources. To participate in the chat, please click on the chat button. This will send a request to the exhibitors to accept your chat. Once the chat has been accepted, it will appear in your direct messages where you can chat, have a one-on-one video call, and get the representative's details. In your briefcase, you will find all your bookmarked resources and the contact details that you have saved. Be sure to always look at our announcements for the latest happenings. We hope you have a wonderful event.
Okay, Assalamualaikum warahmatullahi wabarakatuh, and a very good morning to everyone listening today, live today. Okay, first of all, this session will actually be in Bahasa Melayu. Okay, so I will start with Malay. Okay, so pada hari ini selamat datang kepada semua ke sesi anjuran Bursa Malaysia. Okay, virtual Bursa Marketplace Fair. Okay, dan pada hari ini saya akan membentangkan tajuk Hybrid Way untuk syariah investing. So tajuk ni agak mungkin confuse sikit untuk setengah orang. Okay, so basically yang pertama ialah the key point kat sini ialah hybrid tu. Okay, di mana kita akan bincang macam mana proses untuk dalam investment, dalam investment dalam syariah instrumen, apa yang penting, apa yang boleh dikatakan traditional, dan apa yang boleh dikatakan sort of the ke arah future, maknanya the hybrid way. So that is the focus of today's session. Okay, let me start with what we will study today, apa yang kita akan cover for the session. Okay, yang pertama kita akan start dengan hybrid reasoning, and yang kedua kita akan discuss about hybrid thinking dan hybrid strategy. Yeah, and actually the focus mainly as mentioned before ialah transition. Maknanya kalau sebelum ni mungkin kita tiada reason untuk invest in the market, okay, we have to put a reason there. Same as mindset. Okay, we have to put the mindset there, and same as strategy. Okay, instead of traditional strategy, we put a more concrete or hybrid strategy. And of course, mungkin ramai yang lebih nak fokus kepada strategi. Okay, so that one will be a little bit bawah sikit. Okay, so yang paling penting, so persoalan utama dekat sini ialah why we should go hybrid. Okay, why we should go hybrid. Okay, the first one, okay, the first part is the transition. Okay, that's the transition. Previously, I mean in the landscape of the industry or anything, this is analogy. Okay, the analogy. Okay, previously kita ataupun sekarang actually a lot of us are using petrol car. Okay, and the world is changing, it's moving. Okay, towards electric car. Okay, and in the middle there is something called hybrid. Okay, of course there is already hybrid now. Also kita boleh kata there is a hybrid kata sort of even ke elektrik pun kita ada plug-in hybrid dan sebagainya. So similarly in term of trading, okay, kita nak move ke arah the middle, the hybrid part, because kita tak nak lagi the part where kita in investment move in the old way. Okay, bukan maknanya salah, macam contohnya kita in order for us to move somewhere, we can drive a petrol car and we still get somewhere and maybe performance pun still better now. Okay, but moving forward, the thing is changes, the investment style, the way the market move also changes, so we have to adapt. So today's session is to discuss that. Okay. So same also. Previously we use manual. Okay, now a lot of car is already auto. Okay, and not only that, dari segi kita bergerak, okay, matlamat sama. Maknanya manual tak boleh sampai juga. Kita nak untung dalam saham, boleh juga dengan manual, tidak ada masalah. Okay, the only thing ialah macam mana kita nak tukar supaya benda ni jadi auto, and we are actually embracing the world. Maknanya the teknologi yang ada. And kalau kita tengoklah, even now the car mungkin kita tak jumpa dah kat mana gear. Bukan, of course autonomous is another thing, okay, but even nak kata yang actually we can even invest dalam investment, we can do it seamlessly, because if we adapt with all the things yang ada, okay, we can achieve better. Okay, so before we start actually, okay, I haven't told a little bit about myself, okay, because now I saw ni. Okay, so my name is Anas Faris, okay, untuk yang baru join, okay, reminder from Malacca Securities, where you see M+ platform over there, and then I'm also one of the founder of iSaham, okay, iSaham Siang Berhad, okay, where we also try to move the investment from traditional to hybrid and to future lah. So that is why this topic that I chose today, maknanya topik ni dipilih because of that. Okay, so okay, let's continue. So traditionally, so apa yang kita nak change, what is the landscape, antara landscape yang berubah. Traditionally, in order to choose a stock, to put a buy or sell, kita kena calling, maknanya hello, tengok dalam movie pun banyak hello ni, hello, bagus tak saham ni kan, apa saham boleh beli hari ni, ataupun nak beli ni, okay, which achieve the matlamat, tak ada masalah, as we discussed just now, sampai juga ke tempat dia, but the issue ialah the world is changing, okay, so there is online platform, and of course bila it change, it's not only changes that apa orang kata, macam contoh lah, before this lagi senang kok call tu beli kan, it's also change in term of cost, so cost become very much different. Okay, sama juga dengan decision yang kita boleh buat. Sebelum ni memang ada limitation, bukan nak kata kalau kita call directly, maknanya kita just terus dapatkan jawapan beli apa, okay, bukan yang maknanya tak bagus, tetapi sometimes dia mungkin tak dapat matlamat yang kita nak, because if we do it, if we can do it ourselves, okay, kita boleh capai lebih baik, because dia boleh kena dengan apa yang kita nak. So and then with this, there's a lot of platform out there. We have one, iSaham, okay, kita ada as a complementary to platform-platform yang sedia ada lah. For example, Bursa Marketplace, a lot of stuff boleh dapat kat situ, seperti research report, alpha indicators and so on. So a lot of things boleh dapat di situ. Okay, so let's get started with the first part, ialah hybrid reasoning. Hybrid reasoning. Okay, yang pertama ialah kenapa penting, kenapa kita kena cakap juga pasal hybrid reasoning or hybrid thinking, mindset. Okay, sebab ramai orang dia nak bincang strategi je. Dia pergi punyalah banyak kelas, pergi untuk dapatkan strategi. Last kali tak faham juga macam mana sebenarnya nak untung dalam saham. Okay, macam mana strategi apa yang perlu pakai. Sebab apa? Sebab kita tak ada konkret. Reason ialah dalam hati, thinking ialah macam mana kita berfikir untuk laksanakan strategi. Jadi kalau kita hanya fikir pasal setup apa, memang dalam saham kita tak boleh pergi jauh. Sebab kita setup kita dah pening. Kenapa? Kan? Yang ni this will kita discuss. So the very important dalam saham ialah kita kena ada this whole spectrum. Okay. Alright, and the first one ialah reasoning. Okay. Ramai orang saham bila dia nak melabur, soalan dia ialah boleh buat duit ke? Boleh buat duit ke? Ataupun saham apa untung? Ya, ataupun berapa peratus boleh buat sebulan? Okay. This is actually not reason yang the main reason untuk melabur dalam saham is not really to cari untung ataupun duit. That is the end goal. Kita nak untung, tapi bukan maknanya kita fikir je esok untung, nak untung. Of course that is the thing yang memang akan berlaku, but kita tak boleh straight just fikir untung je. Dalam saham ni maknanya untung saja. It's a lot, it's a market, kita panggil. It's a market with the whole thing in it. Maknanya the simple thing nak understand ialah tak ada orang akan bagi duit free kat kita. Selalu saya kata kalau kita dalam bisnes contohnya, tak ada orang akan bagi duit dekat kita secara percuma. Maknanya kita kalau nak berniaga bukan kita menjual barang, tapi kita kena memberi value. Sebab kalau kita menjual barang, siapa nak beli? Contohlah kita ambil kita nak menjual, siapa nak beli barang daripada kita? Sebab kita just nak duit. Yang paling penting ialah value. Jadi bila nak melabur pun sama. What is it yang kita, maknanya persoalan dia bukannya saham apa akan naik esok, nak buat duit 10% sebulan. Benda tu akan dapat kalau kita cari yang betul. Contohnya value. What does it mean by value? Maknanya kita nak membeli, kita kena faham kita beli apa. We buy company. And we buy company. We want to make we want the company to grow. That is the aim. Sebab kadang-kadang kita just fikir ni kenapa tak naik? Nak macam mana tak naik? Because kita beli apa pun kita tak faham. So kita kena understand, kita beli, kita nak cari yang ada value. Company yang nak bring value, company yang nak buat yang nak buat duit lah, kan, yang have value. So and dalam masa yang sama, we also have to, dalam investment ni, kita juga kena think. Maknanya kalau kita nakkan sesuatu yang baik, jadi we also have to understand, sebab benda tu dia tak datang free. We have to understand ada few things. Yang pertama ialah dari segi syariah aspek. And yang kedua, of course, kita akan bincangkan ESG sikit. It's very short, don't worry, very short. So yang pertama ialah dalam investment, kita bukannya just duit, tapi kita kena faham, kita beli syarikat. Dan bila kita beli syarikat, kita nak beli yang patuh syariah, especially for the syariah investor, and there is a lot of benefit in it. Yang of course the main part of syariah investing ialah adhere to the ni lah, maknanya we for the Muslim the identity and the, maknanya kita follow the guideline, maknanya ataupun dalam bahasa lain keberkatan, kan. And of course dia dah filter out important things. So it's very important, maknanya kita bukan sekadar melabur untuk duit, tetapi melabur untuk future. Kan kadang-kadang kita sangkut dengan fikir esok sahaja, dan lah kali rugi. We have to think long term. We invest, we have follow syariah, and the syariah landscape, of course Malaysia has one of the best. And with the new landscape, so now syariah kita dekat Malaysia ni maknanya is direct. Syariah investor end to end, direct. Islamic broker termasuk trading facilities. This is something to be proud, and from orang yang melabur dalam syariah ni, maknanya kita faham duit kita tu clear, sampai ke level kat sini pun patuh syariah, kan. So it's very important in that. A lot of maknanya syariah punya option is a lot, and adhere to the value. So kita melabur dengan invest in our future life also. And of course syariah already tackle this issue, but there is one thing yang is globally standard called ESG. And ini juga adalah satu benda yang sebenarnya sebagai pelabur kita kena ada. Maknanya kita bukan saja stop melabur di dalam melabur duit saja, tapi kita fikir about the impact on the environment, social and governance. So environment, kita kena faham, because the world the CO2, carbon dioxide emitted every year memang is very alarming, and kalau kita melabur without care, that is an issue. Kalau saya, this penekanan yang saya bagi memang dalam mencari saham, kalau dapat saham yang mempunyai this kind of bukan yang emit CO2, but yang try to address the issue is a plus and can feel it, and the I don't know, but the profit is there. Maknanya maknanya kita boleh dapat banyak benda dalam hidup ni with a value. Alright, ceramah sikit sesi awal ni. Stay there. Even BURSA Malaysia pun ada inisiatif ni. okay, with the index. Okay, mungkin persoalan dia lah, mungkin ni je lah part yang dari segi the heart, maknanya kita nak letak betul ke kita patut letak this kind of value, syariah investing, ESG investing, okay. Betul ke investor boleh make change? Jawapan dia lah betul. Ada few things yang kita kena faham. Yang pertama ialah the industry can change. Okay? Macam mana dekat satu dunia ni boleh bergerak, shifting the money, okay, ke arah contohnya solar energy, electric vehicle. Siapa yang invest in electric vehicle can understand. Okay? It means that the industry is also changing. Okay? Maknanya it can change. Okay, it can change. Okay, and yang kedua ialah macam mana kita as an individu we can also make a change. One of the way ialah bila kita lebih berat ke arah ni, jadi the company akan understand, oh okay, investor memang betul-betul change. And yang kedua ialah we can address the issue. Maknanya as an individual we can address the issue bila ada AGM dan sebagainya. Okay, we can address the issue there. Okay, bagi tahu dekat ni kalau ada rasa macam tidak ke arah tu, okay? Company tidak pergi ke arah tu. And but the question is, can investor really make money? Okay, can investor really make money from this? Okay, jawapan dia ialah yes, because it already create the industry. Okay, this motion is already create the industry. Even kalau kita tengok pada Apple, itself, macam mana dia nak pada ke arah tahun 2030, dia nak ke arah supply chain dia semua carbon free contohnya lah, kan? So all the companies have to invest in this, otherwise dia orang tidak akan macam orang kata lulus lah dari segi untuk supply chain ni. Jadi in a way that create an industry. Okay, so that is very good. So a lot of people already play the part, the industry play the part, but how about us, kan? So that is the question. So bila kita ada reason, kita melabur dengan yang betul, so that kat situ kita dah ada value. Kita nak melabur pun kita nak melabur dalam syarikat. Okay, second ialah kita kena betulkan. Yang ni part yang penting. Okay, yang ni dah masuklah dalam kita panggil investment punya sort of strategi dah. Sebenarnya thinking ni pun strategi. Okay, sebab isu yang berlaku sekarang ni ialah dalam pelaburan. Okay, kita nak bincang isu-isu yang berlaku mindset. Okay. Soal yang apa yang kita kena ubah? Okay, kalau reasoning tadi kita kena ubah daripada kita just nak fikir duit, kita kena fikir kita nak bring value. Okay. Second adalah dari segi thinking, apa yang kita kena ubah? Apa yang kita yang boleh dikatakan sebelum ni, Okay, ramai orang bila benda yang selalu soalan ditanya ialah kalau ada sesuatu perkara berlaku, announcement A contohnya, as an announcement, soalan dia ialah soalan yang ditanya ialah harga naik ke tak, announcement ni bagus ke tak? Okay. So kita start dekat situ. Kita start dekat kalau announcement macam ni macam mana? Sebab maknanya kita tak ada strategi. Okay. Jawapan dia lah announcement A ni selalunya ialah just a small piece of the puzzle. Okay, sama juga dengan news. News. Okay, news. Kalau news keluar, ada satu perkara yang baik atau perkara buruk. Okay, keluar. Jadi kita tanya, naik ke turun ni? Agak-agak, naik ke turun? Kan? So this is sangat penting untuk kita faham, okay, that it is not this that matters to our investment. Maknanya yang ni dia akan jadi part of our understanding but not part of our decision. Okay? Bukan decision still kita mungkin buat daripada understanding tu, tapi bukannya dia tak ada dalam saham ni, dia tak ada kalau A jadi B, dia tidak akan berlaku macam tu. Okay? Kalau contohnya news keluar, dan this is the part yang one of the discussion itu yang termasuk dalam dia punya description tadi, ialah sebab information laju sangat, information dekat dunia ni laju sangat. Okay? Apa-apa perkara dia keluar, news tu keluar, okay, dan orang react dengan sangat cepat. Okay? Jadi the key point lah kadang-kadang harga tu dah bergerak terlebih dahulu ataupun harga dah turun terlebih dahulu. Okay? So price already factored in. Okay? Jadi adakah dia akan go up ke down? Sebenarnya kalau kita baru nak decide selalu dah terlambat. Jadi it's not really a big deal, tapi kita boleh masuk dalam understanding kita. Dia ada project ke apa semua, future kita boleh kira dan understand, and that is one of core component lah untuk study satu saham fundamental pada kita bincang. Okay, alright. So kalau harga dah naik, maknanya price dah factored in. Okay, and if harga dah naik, jadi kita dah boleh skip lah, kita just fikir pasal future. Okay, anyway, all the thing yang kita akan bincang hari ni ialah for educational purpose only, tak ada kata by call ataupun sebagainya. Okay, so please anything yang discuss, okay, make your own ni or consult your financial punya advisor. Okay. Swift, so this is what we talked just now. Maknanya information terlalu laju. Okay, tiba-tiba ada berkaitan dengan drugs, domestic tourism dan sebagainya. Okay, jadi kita nak buat decision, selalunya kita kena buat decision as a whole. Bukannya yang ni maknanya naik, yang ni maknanya turun, bukan. Okay, but it is good for our understanding. Okay, okay. Satu lagi soalan yang selalu ditanya, isu yang selalu berlaku ialah kalau harga naik, dia tanya kenapa harga naik. Kan, this is also the thing that have to change. Harga, kenapa saham ni tiba-tiba naik? Kenapa saham ni tiba-tiba turun? Okay. Saham ni, dia bukannya perkara yang dia naik, ada sebab dia. Kan? It is a market. Okay. Bila kita kena market, maknanya apa? Bila saham naik, maknanya ada orang beli. Okay. Someone is buying the stocks. Okay. Bila harga dia naik kuat itu, maknanya lagi banyak orang yang beli daripada jual. Tapi isu dia ialah orang yang beli tu boleh jadi salah, kan? So jadi kat sini pun tak ada masalah. So, dalam saham we have to understand this. Okay, there is no absolute answer. Tak perlu nak carilah sebab banyak yang kata kenapa harga naik? Sebab ni. Baguslah dia dibeli. Jadilah kali dia beli ke atas. Okay? Sebab satu benda yang mudah je kan faham. Okay? Kalau nak faham benda ni lah. Okay. Cuba imagine setiap orang, kalau siapa yang tanya soalan ni, dia nak kata kenapa harga naik, cuba imagine soalan dia ialah kalau dia ada duit a few millions, for example 5 juta ke apa semua kan. Okay, let's say dia beli satu saham tu, lepas tu dia beli sampai level harga dia tergerak, maknanya banyaklah dia beli. Okay, imagine harga gerak. Okay, dia beli mungkin sebab apa? Sebab dia dah study company apa semua. Dan ada orang lain dia tengok, saham ni gerak lah, kenapa? Yang dia tak tahu, dia bergerak sebab ada seorang lagi tu yang 5 juta tadi tu dia tekan beli, kan? Jadi memang jawapan dia tak ada, sebab everyday is just a market, people buy and sell. Okay? So jawapan dia ialah maknanya kita tidak perlu nak fokus kepada kenapa dia naik atau turun. Yang penting ialah kat sini dia akan masuk dalam technical analysis. Okay? If the price go up, means ada orang buying, dan kalau dia keep maintain, maknanya lepas ada orang lain beli, kurang orang jual, maknanya dia akan continue naik. So that is the thing yang kita boleh understand. Ya, sama juga bila turun kan, ada kadang-kadang saham terjun, gambar betul so terjun, kenapa kan. So kita dah kena admit yang saham ni memang dia punya harga bergerak seperti roller coaster. Okay, so jawapan dia ialah, okay, kita dah nak masuk strategi lah. Honestly, the main part hari ni ialah selain strategi ialah question and answer lah kalau ada. Okay, so if announcement A, jadi harga naik ke turun? Jawapan dia ialah it doesn't matter sangat. It's just a small piece of puzzle. Stick pada strategi. News A keluar, harga naik ke turun? Stick kepada strategi. Harga naik lah, macam mana? Strategi. Kalau strategi kita kata beli, maknanya kita beli. Kalau news keluar, kalau strategi kita kata beli, baru beli. Bukannya based on noise. Dalam market ni, siapa yang beli dengan noise normally akan jadi mangsa. Normally akan jadi mangsa. Bukan maknanya salah, maknanya news keluar mungkin harga terus naik. Tapi kalau dia beli hanya sebab emosi, normally will become the mangsa dia kat sini. Alright. So that is a little bit about hybrid thinking. Hybrid thinking. Jadi we have to change. Okay, from traditionally kita fikir berkaitan dengan A jadi B. This is kalau tanya what is takeaway from the thinking part ialah memang saham macam ni, kita kena terima hakikat. Dia macam ni. So there is no such thing as kalau A jadi B. Kalau keluar yang ni, tiba-tiba dia announce ESOS ni beli ke tak? Dia tak ada macam tu. Dia just, we have to understand. Contohnya kalau ESOS keluar, apa maksud dia? Kan? Private placement, apa maksud dia? Kan? Understanding is very important. Tapi dari segi decision at the end is still about the whole thing. Okay? It's about strategy. Okay, so let's talk about strategy sekarang ni. Okay, so traditionally, dari segi strategi, mungkin yang paling ni this is survey yang pernah buat dulu-dulu. Okay, one of the way orang selalu membeli saham ialah of course dikatakan either some dia baca news, dia dengar benda tu baik, dia beli. Okay. And then bila kata kenapa beli? Sebab satu benda yang bagus. So that's sebab tu kata thinking to issue lah. Kan, sebab hanya satu benda yang bagus, dia beli. Okay. So that is actually not a fundamental analysis. Fundamental analysis ialah we study betul-betul, okay, and kita buat decision daripada full study. Okay, technical pula is study of chart. Okay, sorry, ada slide. Okay, fundamental is actually the future profit, the study of the future profit of the company. Okay, maknanya kalau katakan kita membeli saham hanya sebab satu input, okay, yang cakap dapat projek, itu bukan future profit company. Itu hanya nak bagi tahu company dapat projek. Kadang-kadang mungkin future dia tak tahu bagus ke tak. Okay. Fundamental study of future profit company yang akan ambil semua input ni, news, annual report, quarter report, analyst report, website dan sebagainya, dia akan jadi fundamental analysis. Okay. So kita tak boleh stop dengan A jadi B, A jadi B, tak boleh. Okay. As for technical, ialah the study of company price action, and mana satu yang patut kita pakai, kan? That's a persoalan. Okay, persoalan dia macam ni. Saya bagi jawapan dia yang paling ni straight dia macam ni. Okay, fundamental, kalau kita betul-betul confirm nampak company tu, confirm which never happen. Okay, what the company future profit will be. Okay, for example, the future profit boleh jadi contohlah now is 3 million, boleh jadi 5 million, boleh jadi 10 million, boleh jadi 15 million. Kita betul-betul nampak yang tu fundamental saja pun dah cukup. Okay, so itu one of the straight answer. Okay, tetapi kalau kita tak nampak, okay, kalau kita tak nampak boleh jadi kita, ataupun kita rasa macam boleh hasil risk reward, then technical mainkan peranan penting, because technical ni is satu cara, macam tadi kata, kalau ada orang beli, dia berreflect pada harga. Okay, so maknanya technical ni is not really, maknanya kalau harga naik, kita tak perlu tahu sebab apa. We just need to know, okay, ada orang beli, ada momentum kat situ, ada volume kat situ. Okay, so maknanya ada orang beli, dan kalau volume tu tak kuat, ada orang akan jual. So bila ada orang jual, kita tengok pula, jual ramai pula. Means ada orang, dia just tunggu masa harga dah naik cantik sikit baru nak jual. Kan? So it shows that orang dekat situ dia akan try untuk reflect what is the study. Okay, basically technical ni, okay, ialah kalau majority study fundamental, dan bila diorang membuat jual beli saham, dia akan reflect kat technical. Termasuk kita lah, kita pun part of it. Okay, so let's say ada institution, fund manager ke choose to buy a stock. Okay, so dia study the future, dia rasa bagus, jadi dia beli, nampak dekat technical. Okay, sama juga ada orang yang main hentam pun tekan juga, jadi dekat sini technical dia akan tunjukkan plus minus, sebab tu dia harga dia naik turun, sebab ada yang study betul, ada kurang sikit, tapi let's say the funds yang besar tu semua all boleh tengok dekat technical. Jadi dia punya conclusion dia ialah should we mix ataupun tak. Okay, so the answer is, kalau kita study fundamental, dah memang confirm, faham betul-betul dia punya direction, then is enough. Tetapi kalau kita rasa macam ni, kita boleh combine dengan technical analysis, and that is the method yang sesuai lah digunakan for technical analysis. Kita mixkan, bila kita, maknanya it will help the fundamental. Jadi kita ada 70% confident lah this company can make a profit in the future. Okay, so if kita believe that way, so kita gunakan technical lah, sebab kita still ada 30% uncertainty. So kita guna technical untuk tengok macam mana. Okay, so and there is a lot of ni, kalau nak I think that is ni lah, kalau ada soal jawab apa, that's the thing yang I can explain after this. It depend on viewers yang ada pada hari ni untuk give the soal jawab. Saya suka soal jawab lah, sebenarnya saya suka sesi soal jawab kan, berbanding dengan pembentuk biasa. Okay, because today is a general topic. Okay, satu lagi perkara. Okay, ya, kita akan masuk kita akan masuk strategi. Alright, what is the traditional thinking? Maknanya apa yang selalunya orang isu yang berlaku ialah orang tanya company ni bagus ke tak. Okay, alright, sebenarnya isu dia ialah company kalau tanya bagus ke tak ni, dia sangat vague. Dia sangat vague. Maknanya there is no such thing as good or bad company, because kalau memang company tu teruk, kenapa masih ada orang pegang? Kan? Kenapa harga dia bukan kosong? Maknanya ada orang yang percaya pada syarikat tersebut, pada harga tersebut. Jadi kalau tanya soalan exit company, memang tak akan dapat jawapan. Okay? Sebab company yang bagus untuk A mungkin tak bagus untuk B. Okay, company yang bagus untuk X mungkin tak bagus untuk Y. Maksudnya kalau company tu bagus untuk saya mungkin tak sesuai untuk orang. So everyone has a different appetite. Okay. And ini kalau kita summarize dalam bentuk risk, reward dan speed. Risk, reward, selalu orang kata risk, reward ratio je, but also speed. It's one element. So kalau kita kata sesuatu saham tu bagus ke tak, okay, at the end dia bergantung pada elemen this one, risk, reward and speed. Okay, sebab kalau awak kadang-kadang kata company ni bagus ke tak, okay, dari segi ada bagus pun dia boleh jadi banyak dimension. Macam for example bagus dari segi stability. Ada setengah orang dia kata kalau company tu macam profit dia okay, stable okay, tapi reward pun mungkin okay jugalah, maknanya tak besar sangat. Jadi kalau dari dimensi itu ya. Okay. Kalau orang memang yang mungkin reward dia tinggi ke apa semua, dia kena carilah company yang dalam bisnes yang bila dia buat sales tu boleh jam. Tapi dia akan, isu dia ialah kalau dia betul-betul tak dapat nak understand sepenuhnya, ada risk. Macam company yang boleh buat banyak profit ni, kadang-kadang hilang projek, harga dia pun hilang juga. Risk dia tinggi. Okay. And one more thing ialah speed. Okay. Kadang-kadang ada yang tanya, bagus ke tak company ni? Okay. Mungkin kalau sebab contoh bila soalan yang diterima okay, Top Glove bagus ke tak contohnya kan, lepas tu ada yang tanya Tenaga Nasional bagus ke tak, lepas tu ada yang kata Greatech bagus ke tak contoh, there's a lot, maknanya ni bagus ke tak, ni bagus ke tak. Kalau kita study business saja, mungkin kalau ikut technically dia nak bukan cakap bagus, this is also not a buy call session. Okay, this is not a session, this is for educational je. Just nak beritahu, in most of the time, kalau kita fikir pasal business, okay, let's say kalau dia boleh, adakah company boleh kekal lama? Is macam saya logically speaking, bukan kata ni bagus. Okay, but logically speaking, kita boleh nampak jawapan dia lah, kan? Tetapi maybe isu dia lah for certain saham, bila even bagus, ada kata boleh, ni saya boleh hold lama kan, tapi masalah dia mungkin kena hold sampai 10 tahun untuk dapatkan result dia. Kan, untuk dapat dia ni. Jadi there is balance antara dia ada maknanya bagus tu dengan bagus dan cepat dan bagus dan lambat. So it is very important. And I also have to understand bagus dan cepat ni kalau kita nak dia semua ni dia akan balance each other. Contohnya kalau kita nak cepat, okay, masalah isu dia akan berlaku pada risiko. Okay, risiko dia akan jadi lebih tinggi sebab kadang-kadang dia cepat, dia tengah naik, dia tengah naik, sambung naik. Tetapi risiko dia lebih tinggi lah kan, sebab dia dah naik. Jadi risk dia dah tinggi, jadi bahaya. Nak laju memang kena cari yang yang bergerak lah kan. Kalau kita nak sampai satu tempat, kita cari kereta yang tengah laju atas highway, itu yang paling laju, tapi kadang-kadang dah nak sampai dah destination. Okay? Yang tu yang kita tak boleh nak teka sangat. Okay, so guys, what we have to understand ialah semua orang berbeza dari segi apa yang dia nak capai. Kalau nak dapat yang ideal, memang kita tak akan dapat yang paling laju dan paling high reward dan paling rendah risk. Dia akan sentiasa nak laju mesti risk tinggi. Okay? Dan mungkin kalau kita beli pun dah tinggi-tinggi sikit, reward dia akan rendah sikit. Jadi it always dia akan sentiasa balance dekat situ. Alright. So at the end, macam mana kalau kita fikir traditionally, okay, mungkin kita akan fikir dari elemen company tu okey ke tak. Jadi kita kalau sesiapa yang masih lagi dari segi thinking, kalau A jadi B, kalau B jadi C, kalau D jadi E, maknanya dia banyak lagi yang kena faham dalam market ni. Okay, way to go. Okay. Sama juga kalau orang tanya company ni bagus ke tak, way to go lagi lah. Sebab sepatutnya company ni bukan dari segi dimensi bagus ke tak, dari segi, the key point adalah dari segi sesuai tak untuk kita. Jadi mungkin soalan lepas ni kena tukar. Company ni sesuai tak untuk saya yang nak cepat dan juga saya boleh ambil risiko tinggi, baru kita boleh understand the whole thing. Okay, baru kita boleh come up dengan jawapan. Okay, dan satu lagi isu ialah kenapa orang tanya company bagus ke tak ialah sebenarnya ramai orang tak ada strategi pun sebenarnya dalam saham. Okay, kenapa ramai tak ada strategi? Sebab nak buat strategi tu susah. Okay, nak buat strategi tu agak susah. Saya sebenarnya boleh betterkan benda ni. Okay, nak buat strategi ni, kenapa, apa yang menyusahkan nak buat strategi ni? Okay, so what is core component strategy? Okay, isu untuk create strategi ialah there's too many ways untuk buat strategi. Okay, and this is the part yang kita akan discuss lah, and we have actually setengah jam plus minus the question. Okay, strategi banyak sangat, and if we explore more, okay, let's say anyone try untuk pergi kelas, maknanya pergi kelas A, pergi kelas B, kelas C, kelas D, okay, dia satu kesimpulan yang semua orang boleh buat lepas dah belajar semua benda dalam dunia ni ialah, okay, ada banyak sangat strategi. Okay, ada banyak sangat strategi ni, dan sebenarnya the conclusion ialah bukannya kita kena campur semua yang kita belajar, sebab it never happen. Okay, sebab tu ramai orang pergi sambung belajar A, B, C, D, E, F, G, lah kali dia jadi makin pening kepala sebab terlalu banyak sangat. Okay, and last kali pergi mana-mana pun akan tanya macam mana nak beli saham tapi orang tu dah pergi banyak kelas, okay? Kita pening sikit kan, kenapa, why this happen, okay? Why this happen? Sebab banyak sangat strategi. Yang paling penting ialah start untuk buat. Yang tu yang paling penting dalam saham. Okay, start with strategy 1 and make sure kita tulis benda ni. Ada dalam nota kita, what is my strategy today. Kalau siapa yang tak ada kan. Sebab apa? It will simplify the whole thing. Okay, sebab bila let's say kita masih lagi tanya soalan, ini apa boleh naik ke tak? Kan? Ini boleh naik ke tak? Ataupun ini company bagus ke tak? Kan? Soalan dia, what is your strategy? Kan? What is your strategy? Okay, isu dia adalah kita tak ada strategi, ramai Okay, jadi benda yang paling penting ialah start with satu strategi. Banyak konsep, okay, start with strategi. Dan a lot of this memang kalau mungkin ada yang kata lah, tapi strategi ni macam tersorok ke apa semua. Tidak, even hari ni pun kita boleh bincang, dan banyak sesi-sesi percuma pun boleh dapatkan satu strategi. Kalau kita nak strategi lain, dan cara untuk serap dia ialah kita akan mix yang balik dengan this thing. Maknanya kita nak masuk kat mana. Okay, let's talk about few strategies yang ada dalam dunia saham. Okay, firstly kita faham fundamental and technical, dia boleh gabungkan. Dan apa lagi hybrid way untuk saham ni. Okay, ada hybrid way ialah bukan saja kita melihat dari dimensi only saham apa nak beli apa semua, tetapi kita dah boleh start adapt. First kali macam mana kita boleh combine, and third ialah macam mana kita boleh gunakan semua tools yang ada untuk mempercepatkan kita punya decision, and that's very important. Itu kita bincang lepas ni, tengok masa. Okay, so yang pertama antara teknik yang paling mudah, sebab the key point lah fundamental, tak kisahlah gunalah apa pun, PE ke PR ke PS ke ROE, ROA, ROI, margin ke apa semua, current ratio, debt equity ke apa semua. Last kali kita just nak determine future profit of the company. Okay, so ada banyak benda yang kita boleh guna, ada yang sampai level, ada akronim yang banyak. Okay, contohnya yang paling mudah sekali ialah profit track record. Okay, kalau adakah company tu ada profit track record yang bagus. Okay, for example, the fundamental FCON ialah fundamental consistency. Is the fundamental consistent, and is it sustainable? Okay, if profit track record bagus and sustainable, okay, that mungkin boleh jadi salah satu kriteria kita. Okay, jadi kalau kita tak pernah ada strategi dalam dunia ni, mungkin kita boleh start dengan adakan satu. Contohnya kita adakan yang ni. Okay, ada banyak lagi. Yang ni my favorite actually. My favorite fundamental strategy ialah speed of the company. Okay, rest orang cakap. Kita nak tengok dari segi company tu, dia punya speed tu macam mana. Bukannya dari segi profit dia keluar macam mana, tapi dari segi kalau kita understand, kita tengok input-input yang ada dari quarter report dia mungkin ada mention dekat website, normally jarang update. Kita tengok apa analis kata kan, news kalau ada yang kata, tapi bukan untuk beli terus, tapi untuk understand the speed. And sekarang ni musim kebanyakan company buat briefing. Tak silap saya kalau pergi conference hall yang berbeza, ada juga company briefing, bukan company briefing lah, dia cerita sikit pasal company. Okay, and this sebenarnya adalah satu jalan sebenarnya kita nak dapatkan direction dia. Sebab soalan yang mudah je kita boleh tanya waktu company briefing, ataupun sebenarnya kalau dulu-dulu waktu company briefing ni tak banyak, ialah AGM lah. Kita pergi AGM, kita tanya soalan-soalan just nak faham direction. Contohnya lah, kalau owner dia kata ya kita on track, masih lagi, maknanya ada owner yang dia just benda tu dia dah, business tu dia dah, operation dia ialah dia macam tak bergerak sangat, dia still benefit dari anything yang dia jual. Okay, maknanya for example the industry naik, dia benefit, tapi dia tak ada direction ke hadapan kan. So this is one thing, but yang fundamental ni punya part memang dia tak ada, this is the qualitative part. Okay, and yang ni part sebenarnya my favorite. Okay, my favorite ialah untuk understand the speed of the company. Okay, but yang ni kena buat kerja sikit. Okay, So it can be strategi, and kalau mungkin kita just try study sikit pun okay, tapi kalau mana study banyak extra. Okay. And for example, another ni ialah the financials, the financial guy, ramai financial guy juga. Okay. So kata okay, kita tengok ROE, kita tengok current ratio ke apa yang match kriteria, tak ada masalah, boleh guna teknik-teknik yang macam ni. Okay. Sama ada compare dengan kawan-kawan yang lain ataupun just see that. So this is antara strategi-strategi ada. Dan bila kita belajar banyak, kita pun macam rasa nak semua benda. Tak boleh dekat dunia ni. Satu ialah masa yang tak ada. Yang kedua ialah even bila kita, okay, so this is kita nak talk about bila kita nak automate benda ni, maknanya kita nak jadikan benda ni some sort of screening pun sama. Kalau nak gabungkan semua, nak bagi perfection, memang tak akan dapat. Okay, and that's why orang confused dekat ni. Kenapa soalan ni masih boleh beli tak saham ni? Sebab dia sangkut dekat part yang mana kena achieve semua tu strict, tak boleh. Okay? And isu kat situ. Jadi kita start somewhere yang kita kata okay, kalau fundamental ni dia overall okay, sort of okay. Sama dengan technical, okay, now talk technical, okay, isu dengan technical. Okay, ramai orang fikir technical dari perspektif setup yang terlalu terperinci. Macam contohnya nakkan moving average MA 13 kan, hari ni belajar sekarang 10 hari bulan MA 10 kan, macam nak RSI stokastik, dia cari yang tu. Sebenarnya si sad to say that benda-benda macam ni memang tidak akan basically kalau kita cari sejauh mana pun dia tidak akan, tak ada satu perfection lah sebenarnya. Okay, so the main component dalam technical analysis ialah konsep. Okay, konsep maknanya kita ni nak beli yang style apa. Okay, adakah kita nak tengok dari perspektif chart pattern, maknanya macam mana harga bergerak, corak pergerakan harga. Adakah kita nak tengok dari segi trend. Okay, maknanya trend dia, maknanya kita nak yang trend menaik ataupun kita nak trend yang naik and then slow down. Okay, yang tu lebih penting sebab tak kira kita guna MA ke RSI ke apa semua, gunalah tekan sampai 100 pun, okay, last kali dia akan pusing-pusing balik ke sini juga. Kan, sebab kenapa kita jadi isu, sebab kita cari RSI je, kita kata tak dah study ni, tak naklah nak guna yang lain. Kita pun cari ada sesi yang ni pula cakap yang ni. Kita last kali kita start dekat RSI 13 ke 25 itu masalah yang berlaku. Jadi yang paling penting ialah kita dapatkan konsep yang paling sesuai dengan kita. Okay? Of course nanti saya boleh bagi tahu favorite saya selepas ini. Okay. Konsep yang ada. So sama ada price trend ataupun kita boleh tengok kepada support. Okay, juga kita boleh tengok kepada sorry ni bukan juga, ni kita kena pilih. Okay, adakah kita breakout ni style. Okay, dan setiap satu ni kalau kita kena study sikit lah, maknanya kita kena belajar sikit. Okay, setiap satu part tu I mean in a longer session lah kan. So kita, the key point ialah dekat sini kita kena pilih mana yang paling sesuai dengan kita. Okay, so to start with kita kena dapat satu strategi pun dah cukup. Lepas ni saya akan tunjuk contoh kalau kita ambil satu strategi je and kita boleh terus pakai, and selepas tu kita adjust. That is the key component dalam saham. Okay. Dan so apa isu dia dalam technical ni? Okay. Ialah saya kena ni sikit. Okay. Alright. Okay. So isu dia ialah bila kita gabungkan sangat benda dalam chart, okay, kita dah jadi pening kepala sebab kita sendiri tak tahu apa sebenarnya kita buat. Okay. Technical is supposed to be, okay, so what is the difference technical? Technical is supposed to be, advantage. Okay, fundamental memang ialah the value sebenar company. Jadi kalau kita betul-betul boleh understand the company, then that is the direction lah. Okay, as for technical is supposed to be, dia memang untuk bantu fundamental. Cuma dia akan ada macam orang kata apa, dia more kepada dia kalau naik saham dia boleh naik dan dia boleh turun, dia probability, dia banyak probability. Okay, sebab kita hanya tengok pada chart melalui transaction yang dibuat oleh semua orang. Okay, so probability, for example, if this has a better probability 60% chance ni, and kita nak try jump. So it's macam satu benda yang kita kena stick dengan strategi, follow strategi. Okay, means like dia tak ada satu jawapan yang confirm. Okay, so kita masuk kat sini balik. Okay, jadi tak kira lah kita pakai macam mana pusing pun, orang pening sebab dia try untuk cakap, oh okay, yang ni tak holistic lagi apa semua. Kalau macam ni, kan. The better ialah untuk kita understand price movement. Kan, the price movement. Sebab the basic of basic ialah konsep dia. Okay, contoh. It's better to be like this lah. Kan, it's better to be like this. So, for example, kita nampak price movement dia apa sekarang? Contoh kalau sekarang ni harga naik, ini bukan nak komen cat ni, saya just nak tunjuk contoh technical analysis. Jangan kata, first kali education purpose, second ialah memang ni randomly saya ambil saham ni. Kena bagi tahu siap-siap. Okay, for example, bila harga saham tu dia start naik, okay, kat sini, it shows apa? This shows that there is a buying, okay, dan seller tak cukup kuat. Kan? That yang paling penting. Inilah perkara paling penting dalam kita nak membina strategi. It's not whether saham tu sort of kata it's not really stokastik yang menyebabkan harga naik, bukan. Okay, it's what behind it. Sama juga bila kita belajar, contohnya ada few things yang kita boleh gunakan. Agak sini. Sorry. Okay, so for example, chart pattern, trend, breakout, sebagainya, is more kepada price movement. Okay, so for example kat sini kita nampak dia dah start naik daripada mula-mula orang dah menjual. Okay, lepas tu maknanya ni mainly adalah maybe because of the sector. Okay, jual semua, lepas tu ada cuba buy, maknanya ada orang rasa harga dia rendah. Itu je sebenarnya yang berlaku dalam saham. Okay, jadi bila kita create strategi, kita kena faham, okay, strategi apa yang kalau dari sisi technical yang mempunyai chances untuk dia terus naik macam ni, kan. Dan chances ialah dia kenalah tunjuk sikit ada buying power kat situ, contohnya, kan. Ni contoh, ada buying power sikit, kan. Lepas tu harga naik ada buying power sikit. So the aim is not on the RSI stokastik, but on what happened. Sama dengan chart pattern. Okay, ini kalau boleh tunjuk belakang lagi. Okay, so the pattern shows apa? Maknanya ada seller yang panic waktu crash dan sebagainya. So and then ada collector kat bawah, and then dia continue dengan kenaikan. Jadi dekat situ dia justify apa yang cuba berlaku. Maknanya institution apa banyak collect kat bawah dan sebagainya. Okay, so that is more important than satu-satu. Jadi bila kita faham benda ni, kita boleh pilih konsep. Jadi bila kita join mana-mana session, kelas ke apa, aim kita understand untuk tengok ini konsep apa, macam contoh kalau tengok dalam ni, antara konsep ada ni stokastik, contoh. Jadi stokastik dia punya konsep ialah dia cuba untuk detect bila harga tu turun, ini maknanya orang jual semua. Selalunya lah kalau jual tu apa yang dikatakan dah jual banyak, ini oversold punya konsep, kan, bila dia duduk bawah kat sini. Okay, boleh juga buat sini, kan. Okay, tadi JCM contohnya, contoh. Okay, ni yang tadi belum miri, contoh. Okay, so apabila harga tu drop, okay, so yang mana yang dah jaga, kita dah nak rasa macam kalau kita suka yang style macam ni, maknanya kita boleh gunakan teknik ni panggil oversold. Yang bila harga drop kat sini, itu satu teknik. Tapi kita tak perlu stick lah, kena stokastik 14 apa semua. Kalau kita guna satu teknik, kita boleh teruskan yang tu. Okay. So basically yang tu yang paling penting. Kalau kita nak oversold, kita boleh cari yang oversold. Okay, kalau kita gunakan indikator tak ada masalah, guna macam tadi tak ada masalah. Yang penting kita faham kita guna konsep apa. Oversold. Sebab selalunya harga dah jatuh bawah, dia akan rebound, kita tak tahu bila, kadang-kadang dia jatuh lagi. So what we need ialah a game plan. Okay, alright. So kita start, macam mana kita nak bina strategi. So sesiapa yang tak ada strategi kena bina strategi, adalah strategi satu. Oh alamak, the time is moving. Okay, no, because Q&A most probably, hopefully dia boleh dapat lah lepas ni, dalam 10 minit kita boleh bincang Q&A. Okay, so kita tak perlu ambil semua, maknanya contohnya kalau ada semua konsep, kita tak perlu ambil semua konsep. Start dengan mana-mana yang kita dah belajar. For example, ada setengah orang dia dah belajar breakout. Ni contoh ni tadi. Okay, dah belajar pasal breakout. Okay, ada breakout and then dia ada tengok volume. Ada setengah orang dah belajar rebound volume pun dah cukup. Okay, maknanya tak perlu nak campur yang ni, campur tak perlu. Kita guna apa kita faham dulu and then kita try. Okay, that is the most important. Ada setengah fundamental mungkin lah nak study banyak tak dapat. Okay, dia tengok current ratio, dia tengok Edmond Z. Okay, is okay. Alright, maknanya dah cukup. Dan ini pun sebenarnya dah cukup strategi dalam saham. Okay, maknanya once kita dapat satu jenis strategi, it's already enough. Kita tak perlu nak sampai gabung sampai banyak-banyak, tak perlu. Okay, it's enough untuk have a strategi. Yang penting ada, sebab kalau kita tak ada strategi, kita akan tanya. Okay, contoh kalau kita dah ada strategi, macam ni contoh lah, ni very simple strategi yang saya faham ramai yang pakai. Not my favorite, but ramai pakai. Okay, let's say ada yang pakai strategi yang macam ni, breakout or rebound, and then financial ratio dia tengok lah, asalkan current ratio dia okay, Elman Z dia, Elman Z mungkin high level sikit, current ratio. Okay, so bila ditanya soalan, ni saham ni okay ke tak? Jadi sebenarnya dia dah ada jawapan, sebab dia dah ada strategi dekat sini. Dia dah ada strategi ni. So itulah jawapan dia. Kan, jawapan dia ialah, okay, saham tu tengah rebound ke tak? Tengah breakout ke tak? Ada volume ke tak? Ada MZ ke tak? So that is the thing yang kita kena buat. Dan honestly lah, dalam bursa Malaysia ni, there is a lot of ni just to say lah, maknanya banyak free session, okay, yang memang ada bincang strategi. Maknanya dah boleh start. Cuma kadang-kadang kita ni ada, saya pernah dengar, dah jam banyak betul-betul kelas, tapi tak pernah trade, tak lagi semangat kumpul lagi. Tak boleh. Saham ni, the analogy, the closest analogy ialah seperti cooking, masak. Kalau orang nak belajar memasak dengan hanya tengok video sampai 100, tengok enjoy, bicara apa, masak ni apa semua. Bila pergi kat dapur tak reti buat juga. Dia kena masak, buat, adjust. Masak buat, okay, yang ni, ni. Lepas tu rasa, sebab mungkin kita campak lain dengan orang lain campak kan. Rasa. That is saham. Okay, so kita boleh adjust. Let's say kalau kita dah pakai ni, so firstly kita pakai, and then kalau kita rasa macam tak kena dengan kita boleh adjust. Okay, kita boleh adjust. Okay, contoh kita adjust. Okay, selama ni mungkinlah kita dah study, kita tengok, actually sector trend adalah important, antara perkara penting. And honestly, it's my favorite, sector trend. Okay, utilizing the thing yang kalau sebelum ni mungkin susah sikit nak study. Okay, but bila ada platform, cakap kalau dekat bursa ni kita ada banyak lah kan, kita ada screener and so on. Okay, ada banyak kat situ. Kalau nak tengok research report pun, kena dapatkan knowledge, boleh tengok dekat sini. And as a complementary, ada platform lain lah, macam kalau macam iSaham contohnya, with the sector analysis. Jadi kita boleh tengok sektor apa yang tengah kuat. Bukan maknanya sektor ni akan naik esok, tapi kita boleh faham kalau strategi kita kata sektor kuat, kan? Because normally dalam the market, sebab dia macam ni, satu perkara pasal sektor ni, okay, yang menyebabkan dia kuat sikit banding dengan yang lain ialah dia, orang kata apa, satu cara fund ke apa semua beli ialah dia ubah ke sektor. Jadi bila dia ubah ke sektor, dia macam like semua pun benefit, tak kira saham tu bagus ke tak kan. Jadi dekat situ dia ada satu merit. Tapi ini bukan, sekali lagi bukan by call, this is a strategy discussion. Okay, so one of it ialah untuk look at the sector kan. Kalau trend, ni trend lah, sebab tu technical, it's just a trend. Okay, jadi mungkin kita boleh gunakan yang tu. And I think it's a good place to start, okay, untuk tengok the sector part. Okay, so kalau macam ni dekat iSaham, can go to sector and list all sectors. And from there boleh nampak lah what is strong. Sekarang ni yang paling kuat precision machining. Bukan maknanya kena beli, dia nak bagi tahu yang dia punya trend tu ada sebelum ni. Okay, ya ni dia satu naik, ada yang ni, lepas tu yang lain semua pun join sekali kan. So this is what happen now. So sector untuk saya is very dari segi knowledge dia, dari segi ni ialah dia ada satu reputation lah. And then dari segi chart pattern, high level sikit. Okay, mungkin kalau siapa yang baru mungkin tak payah pakai dulu, tak penting. Okay, contohnya price trend. Price trend ni this underrated lah sebenarnya. Kita confuse sebab kita duk cari price trend MA berapa apa, tak perlu. Yang perlu ialah okay, anyway, just ambil random saham. So yang perlu ialah untuk melihat kepada, kita faham macam ni, senang je. Company ni dia punya price trend tu macam ni sekarang kan. Macam sekarang ni apa ni, sideway kan. So sideway, jadi kita kena tahu dia, is it sideway, is it uptrend, is it downtrend. Okay, sebab kita boleh understand cara pergerakan harga. Okay, contoh kat sini kan, bila kita nampak harga tu dia start mula bergerak, okay, maknanya apa? Maknanya buying power tu ada kan, buying power ada. So dekat situ kita understand karakteristik kan. So kita boleh kata macam ni lah kan. Macam contohnya kita menggunakan, kalau price tu uptrend, okay, kita boleh kata okay, that is one of strategi. And strategi mudah tapi sebenarnya powerful dalam saham. Okay. Yang ni of course lah kita tak ada nak bagi tahu beli atau jual, tapi apa yang nak bagi tahu ialah waktu harga dia bergerak, selalunya dia bergerak lama. Kan? That is the most important thing yang kena understand. Okay, so let's say harga dia bergerak. Jadi kalau kita beli dekat mana-mana area pun, ada yang kita boleh dapat secara short term. And bonus ialah kalau kita betul-betul dah study dari segi fundamental. Jadi kalau kita ada playbook kita kata, okay, company ni track record bagus. Yang ni bukan sebab ni kita talk about the history, bukannya buy call dan sebagainya. Okay. So, if the company has a track record yang bagus, so kita dah dapat satu part. Okay, and then if what is the speed of the company? Is it dari segi business model dia? Is it something yang macam boleh show profit dalam segala datang? And then kita just gunakan tadi, kita tengok sama ada sektor dia bagus ke tak, price dia uptrend ke tak. Price uptrend ni senang je, kalau nak basic dia lah, kita boleh tengok je, sebenarnya boleh tengok dengan mata kasar lah. Otherwise kita boleh, okay, satu cara ialah kita boleh tengok je, dia naik ataupun dia turun pada masa yang beberapa bulan. Itu saya punya favourite lah, beberapa bulan naik ke turun. Okay? Sebab kalau beberapa bulan dia naik turun, yang ni apa, dia naik, dia punya tempoh sambungan tu agak panjang. Okay? So kita boleh start from there. Okay, start from there. And then sama juga, nak beli apa area yang sesuai untuk beli. Kalau harga kita dah nampak mempunyai trend dan sebagainya, kita tahu dari segi saham, okay, harga dia memang naik turun. Nak tak nak lah, harga dia memang naik turun. Of course lah, ada special case yang naik meroket sampai bila-bila. Okay. Okay, so basically ada notice untuk ni sebab Q&A. Okay, so basically bila harga saham tu naik, kita akan nampak dia ada pattern yang naik sentiasa lepas tu turun. Okay, naik turun. Okay, so dari segi strategi, kalau kita dapat yang tengah menurun, kita akan dapat harga lebih rendah daripada yang tinggi. Jadi dekat sini kita boleh bina strategi kita semudah tu. Okay, semudah tu, maknanya understanding that price action fundamental is very good. Price action ada, dekat dengan support, sektor pun ada, kita dah boleh bina satu strategi. How about exit? Mungkin soalan dia, how about exit? So satu cara mudah ialah sebab kita tak tahu saham ni dia boleh kekal ke tak. Kan? Satu cara ialah kita akan exit apabila, okay, contohlah, any saham. Kalau dia naik, dia punya momentum tu berterusan. Tapi kalau katakan harga sesuatu saham tu, dia start buat perangai dia lah. Contohnya dia start tukar trend, turun ke bawah, ataupun dalam bahasa mudah ialah dia ada support and then broken. Okay, tapi ini high level sikit untuk yang baru. Okay, kata all the audience. Okay, so bila harga dia drop, okay, so at certain point kita kata okay lah, tak apa. Maknanya dari segi saham ni mungkin dari segi strateginya kita kata okay, kita kena exit walaupun loss. Kan? But mungkin kita tak macam tu, mungkin kita memang sebab kita beli dekat area yang bagus, kita tahu yang bagus, jadi mungkin kita hold until dia support, dia tak broken lagi. Jadi kadang-kadang kita hold je sampailah pada masa akan datang dia mungkin broken dari support. Okay, yang ni nampak macam ni sebab kita ni. Okay, ni contoh. Okay, sebab kita bincang historical Okay, so for example JHM ni nampak naik je kan, tapi sampai satu masa tu dia dah dah tak normal macam dekat sini. Contoh ni contoh strategi. So one of the strategi kita boleh buat ialah apabila kita nampak satu position yang kuat tapi lepas tu dia broken, okay, dia telah imply satu rule dalam technical analysis. Bukan maknanya semua orang ni pakai teknik ni. Ini satu cara untuk kita play safe lah. Kita mungkin beli dah daripada awal lagi and then kita jual sebab kita rasa perubahan dari segi sifat. Okay. So that is a technical analysis. Kita kena ada strategi bila nak entry, bila nak exit. Exit paling mudah ialah apabila sifat-sifat yang uptrend ni semua hilang, kita mungkin keluar. Dan tapi dia bergantung, ada setengah orang beli dengan cara lain, dia punya exit pun lain. Okay, and of course paling penting ialah ada strategi, dan paling mudah ialah buat paper trade lah. And paper trade ni kalau yang paling saya syorkan adalah di Bursa Malaysia yang paling mudah. Okay, login je, lepas tu dia akan ada part untuk portfolio untuk create. Cuba kan, this is the most important thing dalam saham. Okay, I think the time ada sikit untuk Q&A, mungkin kita ambil 1-2 soalan kalau ada. Alright, thank you very much. Okay, first alright. Okay, actually tengah tunggu note so but the first thing ialah thank you everyone for joining the session. Okay, hopefully kita boleh slide dulu ni. Okay. Okay, hopefully kita boleh start. Anyway, kalau nak kata take away hari ni ialah first kali ialah perubahan dari segi kita membeli bukan sahaja fikir straight untung, okay, tetapi kita bring value to the world as well. Second ialah kita dari segi mindset, bukannya kita stuck dengan kalau A jadi B. Dalam saham tak macam tu, and memang sedih untuk kalau bila kita terima hakikat, macam tu. Kan, memang dia bukannya A jadi B. It's all about strategi. Strategi boleh naik dan strategi boleh turun juga. Okey, kejap. Okey. Right. Okey, sat. Okey, and dari segi strategi tadi, dia tak ada strategi yang confirm naik all the time. Kena terima hakikat, kena terima tu. So we study fundamental, study technical, have kita punya teknik untuk buy, have a technique sell, and use all the tools yang ada untuk gain the advantage in the market. Okay. Oh, alright. I think it's okay lah, because masa pun dah habis. Tak apalah, hari ni tak apa. Kita tak sempat nak ambil soal. Sekarang boleh test. Okay. Alright. Boleh buka dua sebentar. Okay, but it's okay. I think actually dia soalan dekat tempat lain soalan dekat tempat lain, but I think it's okay. That will be all for the session. Okay, hopefully everyone can benefit and have their first strategy, and the strategy keep changing. Maknanya kalau esok kita rasa kena tukar sikit, kita tukar sikit dekat situ. Okay, kita adjust. Mungkin kita dari segi support apa semua, adjust sikit. Ambil knowledge yang ada dalam market, ada banyak knowledge percuma ada, ambil, okay, letakkan dalam strategi and cari yang paling sesuai dengan kita. And that is the key component lah dalam market. Alright, I think that will be all good for today. Okay. Thank you very much for joining the session.
All right, Assalamualaikum and a very good afternoon, everyone. So I know it is lunchtime already, so I really appreciate that everyone is staying in to listen to this session. So I'll try my best not to disappoint every one of you. So before I start, I hope everyone is been keeping well. Since we are currently going through a tough time with the ongoing COVID as well as the current uncertain times. But please do take care of yourself and do reach out if you need any help. So for today, the key focus of my session will be on ETF, and the topic will be called Do It Yourself with ETF, Personal Portfolio Allocation and Diversification. All right, I think just before I start, probably I give you some of background about myself. So my name is Muhammad Kamal Mustaza. I'm a fund manager of Value Partners, and I joined the firm in April 2019. So it has been about 2 years plus already that I stayed with the firm. Relatively, I think I'm still quite new in the industry with over 9 years of experience in the investment industry. I've been in both the GLICs as well as the non-GLICs with a diverse exposure in managing funds in both conventional and Sharia space with geographic focus ranging from domestic to regional. I graduated from University of Melbourne with a bachelor's degree in commerce, and I'm also a charter holder of CFA, CAIA, FRM, and Chartered Professional in Islamic Finance, as well as the CMSRL license holder. And feel free to connect with me via LinkedIn. I'm more than happy to discuss and chat about any topics ranging from investment to non-investment part. So probably before I proceed, I think I need to give a disclaimer that the content that I'll be using in my presentation will be more skewed towards educational purposes rather than an investment advice. So should you need to seek an investment advice, please go through your licensed fund managers or brokers to get the necessary investment advice. So in terms of the content, let me start off by introducing the company that I work with. So Value Partners is relatively one of the newer kids in town. When I say in town, it means in Malaysia. We established our KL office in 2018, but the firm as a whole has been established for quite some time already. It is one of the Asia's most established asset managers with AUM of $13.1 billion across different asset classes. So our investment approach are filtered towards value investing, and our specialty or expertise are towards Greater China equity. So the firm is listed on Hong Kong Stock Exchange since 2007, and it is headquartered in Hong Kong with office in Shanghai, Shenzhen, KL, Singapore, London, as well as a rep office in Beijing. This is to provide localized research and client servicing. And also, please follow our Facebook page, Value Partners Malaysia, as well as the Twitter page, Value Partners MY, to get more information and insights on what's going on in the investment world currently. Yeah. So this is just to show you the milestone of the company. So the company was founded in February 1993 by fellow Malaysian and fellow Penangites, Datuk Seri Chia Cheng Hai and his partner. With Greater China Equity Strategy as the flagship fund, and since then the company has diverse to go into different asset classes like fixed income, multi-asset, real estate, as well as opening up different office throughout the world. So now we'll be talking about ETF. So let's tackle the 5,000 ringgit question first. So let's say you are given 5,000 ringgit to invest. How then do you proceed? So your options are ranging from a mutual fund, shares, or even ETF. So if you look at mutual funds, it is basically the actively managed that tries to outperform each benchmark by investing in the undervalued securities, market timing, holding concentrated portfolio, and even potentially employing derivatives to enhance its return. So because this is actively managed, funds like this usually command a premium, and this resulted in a higher management fee, and some of them might even charge a performance fee, and they may take on more risk to achieve potentially high returns. But at the same time, I think there's no certainty or guarantee that this fund will actually outperform against the benchmark. So there's always a risk of underperforming the benchmark when you go into this route. So if you like to cut the middleman, you can go directly into buying shares. So that you as investors don't really have to pay any management fees. But at the same time, you have the full discretion on deciding what to buy, when to buy, and how much to buy. However, the individual investors may lack the economies of scale. Investors may incur higher costs per transaction, and the ability to diversify is also limited by the investors' available investment capital. So for our example just now, it's about 5,000 ringgit. So I think it's not much if you are looking to buy into individual shares. Then your other option is ETF. So what is actually ETF? ETF is a basket of securities wrapped as a single product that can be bought and sold on the stock exchange. So I think that the picture here, the picture of the basket here actually it actually tells you the whole thing about ETF. So you can see that in the basket comprised of different stocks, stock A until stock E, and this stock and all these stocks are put in one basket or one financial product, and then it is traded in the stocks exchange. So ETF basically combine the best of both the index funds as well as the individual stocks. So it is similar to the index fund in the sense that it is an open-ended fund scheme. It also tracks a benchmark or index. So because index fund normally track an underlying benchmark, so it normally resulted in a lower expense ratio compared to actively managed funds. And I think similar to index fund, ETF also have high transparency and low turnover due to the fact that it is passive in nature. However, it is also similar to a stock where it is traded on stocks exchange during market hours, whereas the minimum trading unit is one lot, which is 100 units, and the indicative NAVs and real-time prices are available to investors. This is as compared to like a unit trust or mutual fund that are using the forward pricing or delayed pricing for that matter. So how does ETF work? So normally ETF seeks to track the performance of an underlying index. So for example, that we are using here is FDMPLCI. So let's say we go back in time to, I think, 18th of March 2020, when I think the government just announced the implementation of the first MCO, and I think the market was at an all-time low at about 1,200. So you decided that you need to go into the market, but you don't know what to buy. So you decided to go to just buy something that tracks the FBMPLCI benchmark. So fast forward probably like 6 months after that, you can see that FBMPLCI has recovered since the lowest point. I think give a return of about 23%. So let's say, without any need to go into to individual stock analysis, you can actually get the market return by investing into the benchmark itself. So the ETF will then replicate the index based on the index composition. So in this case, the index composition is based on the weightings of the individual securities. So let's say in the FMPLCI consists of 30 stocks. So the ETF will track or will replicate the index constituent based on the benchmark weights. So let's say public bank is the weight is about 10.5% in the underlying benchmark. So the ETF will try to mimic that as well. So as a result, it will then package into an ETF product, and this is where it bringing the best of both world of stocks and index funds. For example, like a stock, it is trading intraday, so it gives the flexibility to investors, and it is generally liquid. Whereas like an index fund, you have the exposure to benchmark indexes, and you also benefit from the diversification, low cost, and the low turnover. So ETF comes in many shapes and forms. So I think it's up for you to decide what it is. But as I understand, I think, on the Malaysian landscape, I think we are still working towards building all this full suite of ETF products. So I think globally, we can see that asset type ranging from equity, fixed income, commodity, currency, and even exotic or alternative. And the subcategory is actually more, I think, for equity, we have the broad market like FBM, KLCI. We also have like a sector and even style, such as I think a dividend-focused ETF. And I think in recent years, we are seeing more exotic alternative ETF being introduced in the Malaysian market, like the leverage and inverse. I mean, globally, we also have the volatility, spreads, long short, global macro. And I think this year there was a cryptocurrency ETF being introduced in the market in Canada, if I'm not mistaken. At the same time, I think there's also an overlay to the ETF, ranging from Sharia, social responsible investing, ESG, or even sustainability. So in terms of the features of ETF, it can range between how the ETF is managed. So on one end, you have the passive investing, and on the other end, you have the active investing. So when we talk about the passive investing, we are basically saying that the ETF is fully tracking the benchmark. So it doesn't really try to add alpha into the performance of the ETF. Whereas for active, normally it divert away from the benchmark index, and it tries to achieve alpha on top of the market return or beta of the return. At the same time, I think the weighting methodology also differs. I think usually, normally plain vanilla ETF just follow a market cap weight, but there's also a smart beta ETF that follows the equal weight as well as the fundamental weight. And in terms of the replication strategy, it is ranging from the full replication strategy. This is basically if there's 30 stocks in the benchmark, so the ETF will just buy all the 30 stocks based on the index composition there. But at the same time, there's also a representative sampling that can be used. And to the other end of it is the optimization. So both usually employ different set of mathematical models to ensure that you don't really have to fully replicate the 30 stocks, but rather you just follow you try to match some of the index characteristics like the correlation of the individual stocks to ensure that you can track the performance of the index. So normally ETF is rebalance frequently. So it ranges from the monthly rebalancing, quarterly rebalancing to semi-annual rebalancing. So when you are thinking about buying ETF, some of the factors that you need to consider include the relative performance as well as the cost. At the same time, the portfolio composition and the performance of the ETF itself, as well as the transaction cost and the portfolio turnover that is exhibited by the ETF. So the key features of ETF ranging from, I think the first one is transparency. We know that when you buy into ETF, you actually see what you see is what you get. So there's a full transparency on the constituent information, performance against the benchmark, as well as cost on a frequent basis. So I think for Bursa Malaysia, every ETF issuer needs to upload the basket information daily in the stocks in the exchange website. So I think that is where you can see all the constituents, all the performance, and all the cost information on the ETF. So in a way, you actually know what you are buying into. At the same time, ETF, there's always an abundant source of liquidity, and the liquidity can come from both the secondary market, the one that you see on the on-screen volume that on the Bursa's order book, as well as the liquidity of the underlying asset via the primary market of creation and redemption. I'll touch a bit about this a bit later in the presentation. So yeah. Then in terms of diversification, ETF also offer immediate exposure to a basket or group of securities for diversification through a single trade. So as I mentioned earlier, I think when you buy into ETF, you are not just buying into one single security. You are buying into a different individual securities. So for example, I mentioned before is the FBM KLCI, which consists of 30 stocks. So when you buy ETF that is tracking FBM KLCI, you are basically buying into the ownership of this each of these 30 stocks. Hence, you will get the diversification benefits through just a single trade. And at the same time, I think it is mentioned earlier that ETF have similarities like an index fund, where because due to the nature of it being passively managed, this also leads to a lower management fee versus the mutual funds. And the fact that single basket trade are cheaper than trading on the individual stocks. And I think like ETF, there's no sales charge compared to what is being charged for the mutual funds. So I think there's a lot of cost effectiveness that is coming from the ETF. And last but not least is the flexibility and the accessibility of ETF. It can be traded throughout the day during the market hours. So in terms of pricing, it's very transparent. And also it offers both diversified broad market and niche exposures depending on what you are seeking. It can be done through a single trade. So I think this is a bit too academic, I think, but there's a lot of academic literature that has been stating that asset allocation itself explain about 85 to 95% of the variation in the performance. What does this say? This mean is actually your decision to allocate your money into different asset classes actually are more important than your decision to buy individual stocks. So if you can see from the chart here, we can see that only 5% of the variation in return are coming from the security selection or the market timing, whereas about 90 to 95 are coming from the fact that you allocate into the right asset classes. And at the same time, I think we were talking about ETF can also help you to achieve a diversification benefits. So we know if you buy individual stocks, you are exposed to that particular stocks risk. So I think we already saw in the recent weeks or recent months, there are companies that have issues on ESGs, that have issues on audit, and these issues will actually affect your portfolio if you heavily concentrated into this kind of stocks. But if you buy an ETF, again using the FDMTLCI, which has 30 stocks, you are basically diversified away the non-systematic risk or the company-specific risk to the point that you are left only with the market risk. All right, so on this slide, ETF is also one of the key advantages because the ease of use. So ETF can provide an immediate and hassle-free process for foreign exposure. So I think currently in BURSA, you can see that there's a lot of ETF that is traded in ringgit, but the underlying securities are foreign assets. So by having this kind of ETF, you don't really need to open up like a foreign brokerage account to invest overseas, but rather you can do it via BURSA itself. So I think that really helps a lot in terms of making the process easier. And even institutions globally are embracing the ETF. So this is a study made by Greenwich Associates in 2018. So the reason that all these institutions are using ETF is basically similar to what I just mentioned, like easy to use, attractive management fee, liquidity, speed of execution to gain diversified exposure, market access, diversification, transparency, lower trading costs, and avoid the need for single security analysis. So like I said earlier, I think much of the returns are coming from asset allocation rather than a single stock selection. So I think this is one of the reasons why institutions are using ETF as well globally. So now I think we move on to the ETF ecosystem. So on the outset, I think ETF seems like a normal equity or securities that is traded on the stock exchange, but actually behind the scene, there's a lot of effort being done to ensure that the ETF operation can be done to make sure that it is smooth, and there's a lot of key parties actually play part. So I think as a start, we have the fund sponsors or the ETF issuers. So these are the companies that actually introduce or create the ETF in the market, and at the same time, they have to work with the index or data providers. So let's say if they are planning to track the MPLCI, they have to work with the FTSE to get all the constituent information. This is to ensure or help them to actually track the index by minimizing the tracking error. At the same time, I think exchange also play a big part here to again disseminate information. I think like the INEF through the market throughout the day. And there's also the ETF service providers like the custodian, trading platform, or distributors to ensure that the ETF can reach to the wider masses. And last but not least, I think this is quite important as well, the liquidity providers to ensure that the pricing remains efficient, and there's volume being traded in the secondary market as well. So this is a simplified version of the ETF ecosystem that we have right now. We have the primary market, we have the secondary market. So on the secondary market is where you see the ETF being traded on the exchange, where ETF can be traded by investors throughout the market hours. And at the same time, if let's say an investors of a big size coming in and they don't see the volume can be, they don't see that they can get the volume in the market, that is where they go into the primary market to do a creation and redemption of the underlying index. So this is one of the key reasons why ETF is an open-ended fund, because the fund size is quite dynamic. It can increase, it can decrease depending on the demand and supply as well. So when we talk about ETF liquidity, there's always a misconception that ETF liquidity depends on the fund's average trading volume. So if we look at the order book on the BURSA, probably it seems like the liquidity of ETF is a bit low compared to other stocks or equity. But this is where I think it's quite misleading, because the posted volume or the on-screen volume does not really equate to the ETF liquidity. The on-screen liquidity is basically the tip of the iceberg, and there is often significantly deeper markets than what is shown on the screen. So let's say there's an investor that is coming into the market with a big size. So definitely they don't really want to spook the market for fear that it might cause a distortion in the price. So for ETF, this will not happen, because for ETF, we have a dedicated market makers to ensure that the pricing remain efficient. So what I mean by efficient is that the pricing will move in tandem with the underlying fair value of the fund, which is the NAV. So let's say if the size is bigger than what the on-screen volume is showing, then there's always the hidden liquidity. This is basically the inventory that is being held by the market makers, and the inventory can be achieved via OTC platform as well as the securities borrowing. But let's say if the size of buying or selling is much higher than what the market makers can offer, this is where you can go directly into the primary market to do a creation and redemption. So by doing a creation and redemption, you are basically trading on the underlying liquidity. So that's why we always say that an ETF is as liquid as the least liquid constituent in the portfolio, where the onus will be on the ETF issuer like ourselves to ensure that the execution of the creation or redemption can be done well. So these are the two parties that is very important in providing the pricing efficiency in the ETF market. So for the primary, market, we have the participating dealer, and for the secondary market, we have the market makers. So normally, the market makers are normally the participating dealer as well. So and the terms being used is quite exchangeable. For simplicity purpose, I will just call them brokers lah. So for the primary market, the participating dealer will transact with the ETF sponsor to help manage the supply and demand on the primary market. So they normally cater for the larger institution that come in a big way. Whereas for the secondary market, this is where the market makers provide the liquidity trading through the market through the bid-ask spread. At the same time, I think if they see an inefficiency in the secondary market, they can also do an arbitrage trading. So how the arbitrage trading can happen? I think, for example, let's say the price of the ETF is trading at RM1, whereas the NAV of the ETF is actually 90 cents. So you have a 10 cents gap there. So what they can do is they buy the ETF on the secondary market, and then they redeem it on the primary market, therefore netting the 10-cent gain in terms of the return. That is where for the arbitrage trading there. So now we go through the ETF landscape. So I think it is very important there's a Malay proverb that says that kenal maka tak cinta, right? So I think it's very important for us to understand it, to actually fall in love with it. So I've been in love with ETF for quite some time already. So here we can see that this is the history of ETF. It started in 1993 with the introduction of the first ETF, S&P 500 Depository Receipt, the Spider ETF, that was launched by the State Street. Previously, I think before that, there's already a few iterations that leads to ETF. One of it is the Toronto Index Participation Shares, which was introduced in Canada in 1990. But even then, I think for the first ETF, the groundwork to create this ETF was started in 1990. So you can see between 1990 to 1993, about 3 years for them to actually come up with the first ETF. So it really shows that the journey for ETF is a bumpy one, but I think it's quite worthwhile there. So it takes some time for the ETF to gain traction in the market. We can see that in 1996, the first international ETF was introduced by iShares, where it debuted about 17 international ETF, including the iShares MSCI Malaysia ETF as well, that is traded in US. At the same time, it wasn't until 2002 where we can see that ETF expanded beyond the equity asset classes. Where iShares also introduced the first bond ETF, as well as the first ESG ETF. And after that, we can see more new entrants, more new products. The first smart beta ETF, which is the S&P 500 equal weight ETF, as well as the commodity ETF, the Spider Gold. And in 2006, leading up to the GFC, we can see more exotic products being launched, like the first exchange traded notes, which is like a debt instrument there. And we also see the introduction of the first leverage and inverse ETF, first Sharia ETF, first active ETF, and first volatility ETF up until 2009. So in 2009, we can see that ETF AUM exceed 1 trillion in assets globally, whereas and next year and the year after that in 2010, we can see that US ETF itself hit USD 1 trillion in assets. Then after that, we can see that ETF continued its growth driven by new issuance and new innovative products. With the year to date, I think we can see the asset under management is about 8.9 trillion US dollars. And I think, like I mentioned earlier, I think earlier this year we saw the first cryptocurrency being introduced in Canada. So this is for me, it's quite exciting to the fact that ETF, it really shows that ETF follows what the current trend that's happening on the market there. So yeah. So now we talk about the ETF landscape in the US. So we know that the bulk of the AUM for ETF is still driven by the US. So in terms of the asset classes for last year, we can see that commodity was showing an increase of AUM by about whopping 64%. I think we can see that largely because commodity prices has been up since mid of last year. So I think that is definitely affect the flow as well. But a bulk of it is still coming on equity, if you can see on the chart on the bottom right there. So now we look at the regional ETF landscape. So Malaysia still lags behind the regional peers, but we are seeing gradual growth in recent years. So right now, we can see that in terms of number of ETF, we have 18 in the market so far. This is compared to 31 in Singapore Exchange and 149 in Hong Kong Exchange. In terms of AUM, the AUM for Malaysian ETF is about 2.1 billion ringgit. This is compared to 28.4 billion ringgit in Singapore Exchange and 449 billion ringgit in Hong Kong Exchange. And the average trading, daily trading, average daily value traded is still small at about 1 billion ringgit versus 70.2 and 3 billion in Hong Kong. But I think if I can direct you in the bottom chart there, we can see that every time there's a new ETF being introduced in the market, we can see there's an increase in the average daily value traded of the ETF. So right now, this is what is the offering that currently we have in the market in BURSA Malaysia right now. So it ranges from different asset classes like bond, equity, and commodity. And also in terms of the subcategory, we have the domestic focus, we have the regional focus, and we have the single country. So right now we have like about 5 Sharia compliant ETF. whereas there's about 4 China-focused ETF. So allow me to verbally mention that our firm is going to launch a Sharia China A-shares ETF next week, and is going to be listed at the end of this month in 28th of July. Yeah. So again, allow me to just verbally mention about the ETF that our firm is going to launch to list at the end of this month. So because it is not launched yet, we cannot give out the full name. So we call it a Sharia China A-shares 100 strategy. So it's going to be an Islamic ETF fund. The launch date is next Monday, where the base currency is ringgit. So the fund objective and strategy is to replicate the Sharia compliant A-shares, which are included in the benchmark in the substantially the same weightings in which they are included in the benchmark. This is in order to track the performance of the benchmark. So the benchmark that we are talking about is the Dow Jones Islamic Market China A-shares 100 Index. Yeah. So like I mentioned earlier, the listing date will be on the 28th of July. So please stay tuned for that. I think it will be quite interesting to look at this space as well. With the initial issue price of RM2, the participating dealers as well as market makers for our ETF is Kenanga Investment Bank and Melaka Securities. So in terms of the management fee, it is up to 0.6% per annum of the NAV of the funds, and I think trustee fee is about up to 0.06%, and index license fee about up to 4 bips per annum. So and on the secondary market, the stock code is 0838PA, and the trading currency, like I mentioned, it is in ringgit, and the trading board lot size is 100 units. So why did we came up with this kind of strategy? So there's a three-pronged approach in the investment strategy that we mentioned. First is the geographic focus, second is the share class, and the third is the thematic consideration. So on the geographic focus, we have China. So we know that China is the second largest economy in the world. So we would like to tap on the growth of China. And at the same time, like I mentioned, Value Partners' expertise is on the Greater China. So we would like to leverage on Value Partners' expertise on this market. And the fact that A-shares remain underrepresented in the global portfolios is one of the key reasons why we believe there is a first mover advantage into the onshore markets. So for the Sharia consideration, we believe that by making it Sharia, we provide access to all groups of investors. And at the same time, due to the quantitative screening of the Sharia methodology, the index composition actually focuses on the new economic drivers. So this is some of the primary that we have for China. So we can see on the left there, we can see that China is on track to become the largest economy in the world. So right now, China is the second behind the US in terms of GDP. And if we look at the projected 4.5% to 5.5% annual growth in the next decade, China's GDP is set to surpass US sometime between 2030 to 2035. So in terms of the long-term outperformance against other markets, we can see that China onshore markets or the A-shares actually outperform against other major indices. And on the far right there, we can see that despite the market cap of about 10.9 trillion US dollars, China's stock market is actually underrepresented with less than 0.22% of global equity fund holdings. So again, this is where we think there's always a first mover advantage into the onshore A-shares market. And again, for A-shares, I think 2019 was a monumental year because we can see there was a big global index inclusion by index providers such as MSCI, FTSE, as well as S&P Dow Jones to add more weights to China. And this provides unprecedented inflows into the A-shares itself. At the same time, A-shares, which has been traditionally a retail market, has seen growing participation from institutions and foreigners. And this is where we believe there's room for the revaluation or re-ratings in the market as well. And last but not least, like I mentioned earlier, due to the function of the Sharia screening, the strategy that we are going to launch is skewed towards the China's new economy with concentration in sector like healthcare, IT, and consumer. And this actually echo the China's 14 5-year plan that they are looking at focusing on the renewables, green economy, urbanization, consumption, etc. So now to the next part is on the ETF application. So how to build your own portfolio using ETF. So how can ETF benefit you? So it can benefit either the newbie investors or the busy investors. So for newbie investors, you normally don't really have much of investing experience. So normally you don't really come from a finance or investment background, and you're not familiar with tools like fundamental or technical analysis. Whereas for the busy investors, you don't really have the time to monitor your own portfolio, and you normally rely on investment advisors or agents' recommendation to make the investment decision. So I think this is just, I think below we can see that Warren Buffett, the Oracle of Omaha, stating that for most people, the best thing to do is owning the S&P 500 index fund. Basically, what he is saying is that the best way for you to invest is through indexing, or by that, it means that you just buy into a passive fund. And ETF is definitely one of the way to do indexing. So if you like to do things DIY, if you can assemble your own furniture, then you definitely can also construct your own portfolio using ETF. So how to construct your own portfolio? This is where we need to combine the investment objective as well as the constraint together with the capital market expectation. And after that, only then we can proceed with the portfolio construction via different asset allocation methodology. So the first step is basically to try to understand yourself. So there's a few things that you need to do. So I think the first step is to understand the risk. What is your tolerance for uncertainty? You need to understand whether or not you can afford to take the risk. So in terms of the risk measurement, there's two sides of it. One is your ability to take the risk, and one is the willingness to take the risk. So when I talk about the ability to take the risk, I think this is more objective. You can basically determine this based on your disposable income, based on your wealth, based on the time horizon that you have. Whereas for the willingness to take the risk, it's a bit subjective, and it depends on your individual investors' psychology and psyche. So, I mean, normally for the willingness, that is where you take some of the risk questionnaires to determine your willingness to take the risk. And you have to understand that your willingness must match with your ability to take the risk. Otherwise, you can't really get the proper asset allocation that you want. So the next step is to look at the return target. So for investors, what kind of returns that you want? Of course, for in everyone's mind, the higher the returns, the better. But it also have to be to commensurate with the risk that is coming with the higher return. And the return target must be logic, must be practical, must be realistic. So in terms of the return target, it can be either a relative return, where you are thinking to get a return higher than something. Something this, like, let's say if the FBM LCI is providing a return of about 5%, then you want to have a return 2% higher than the FBM LCI. So you are looking at a 7% return. Otherwise, you can also have a specific or absolute target return that in mind. Let's say you don't really care about other benchmark, you just want a 7% annually. So that is where we look at the absolute return. At the same time, you also have to look at the constraints there. I think we mentioned a bit about liquidity requirement, whether or not you can afford not to touch your investment due to emergencies. So I think like now we can see that people are going through hardship, I mean, due to COVID. So therefore, in terms of liquidity requirement, it might change for different investors. So once the liquidity requirement changes, then the asset allocation will need to be adjusted to reflect these changes in the liquidity requirement. At the same time, time horizon also plays a part. If, let's say, if you have a short-term time horizon, let's say you are planning to use the money that you have set aside now in the next 3 months, that means you cannot afford to take a higher risk, and you are more skewed towards something like capital preservation or something very liquid. Whereas if you have a more long-term time horizon, if you're looking at the retirement savings or education fund, this is where you can afford to go into the higher risk investment compared to the short-term one. And last but not least, I think is the unit preference. And this is a bit subjective because it depends on individual beliefs and value system. And this is likely to have a material impact on the composition of the portfolio. And I think one of the, easiest example is Sharia compliant. So if you are a Sharia compliant investors, then you definitely cannot buy into conventional banks, you cannot buy into the SIM sector. And that will actually affect how you allocate your portfolio. So once you in a way understand your risk and return as well as your constraint, the next step is to identify the asset classes and the sub-asset classes that are available on the market. So the two key steps here is basically, I just mentioned here, is to identify what's the current offering that is available on the market. And at the same time, this is where you also need to understand the correlation between different asset classes. On the bottom there, you can see the correlation metrics across different asset classes. So what does it mean by correlation between asset classes? So correlation is basically a measure to test the strength of linear relationship between two quantitative variables. So how does A move in tandem to B? So let's say if A is highly correlated to B, that means they move exactly in tandem with one another. And in this situation, definitely there's no diversification benefits of buying either one of them. You can just buy either one. You don't really have to buy both of them. So let's say for a start, we have the, wait, let me show the pointer. All right. So as start, let's look at the Malaysian equity as the key starting point. This is because I think for local investors, you have more familiarity with the Malaysian economy, with the Malaysian equities, and we definitely have a home bias for the Malaysian equity. And after that, we identify, I think, 5 other asset classes. Let's say global equity, developed equity, US equity, China equity, and gold. So you can see against Malaysia equity, all the other asset classes here have low correlation against Malaysian equity. So you might think, okay, I can just invest in all 5 of them. But wait a minute, you need to also look at the correlation between different asset classes. What I mean here is basically you have to look at the correlation between global equity and developed equity, global equity and US equity, and the rest of that. So if you look at the first column there, for the global equity, we can see that it is very highly correlated with the developed equity as well as US equity. While I think correlation doesn't actually explain the causality, but we can deduce that basically US equity basically make a large component of the developed equity as well as the global equity, and that is why their correlation is quite strong. So you want to avoid buying into all 3 of them, and rather you just buy just one of them. So let's say, for example, you decide to choose on the US equity. And then the other 2 is China equity and gold equity. We can see the correlation for both of them is very low. So now you already decided on the 4 asset classes that you have. The next step will then be on choosing the asset allocation methodology. So first of all, you need to gather information on the capital market expectation. So this is where you join into investment talks and seminars, you explore the many facets of investing, learn about asset classes, sectors, geographical exposure, what's the current theme currently popular, and the investing style as well. At the same time, I think you can also learn from professional as well as licensed investors. This is by attending investment conferences such as currently that we are doing right now, trainings and events, and read up a lot on how investing techniques are put into practice. And I think last but not least is you can also ask your fund manager or agent, because they normally have access to all the information like fund fact sheets, market outlook, and other information pertaining to the information that you are interested in. Then the next step is choosing the right method that works for you. So the example that I'm using here is more like the informal or heuristic methods, which is not really as opposed to the systematic method. I think this is more on an experience base. So, for example, the 1/n rule, this is basically you simply allocate your capital equally among the n asset classes. So, what does this mean is that if you have already decided on 4 asset classes, like I mentioned previously, the Malaysia equity, US equity, China equity, and gold. So, how much do you allocate for each asset is basically 100% divided by 4. So you have 25% weight for US equity, 25% weight for China equity, 25% weight for Malaysia equity, and 25% weight for the gold. At the same time, I think there's also the 60-40 allocation. This is where you adopt an allocation that consists of about 60% equities and 40% fixed income, or basically the proxy to cash. Or yeah. So in here, in equities, being, I think, touted as or it's a reflection of the long-term capital growth, whereas fixed income is more towards capital preservation. So this is like a general rule of doing a 60-40 to make, I mean, as a simplified version of it. And I think last but not least, we have the 120 minus your age rule. So let's say you are 30 years old. So by using 120 minus 30, you have 90%. The arithmetic is basically 90, and this reflects the percentage that you will allocate into stocks. What does this mean is that 90% of your allocation are skewed towards equity, whereas the 10% is more on the things like fixed income or cash. So this is age-based change in equity exposure. So the older you get, the lower your equity exposure and the higher your fixed income or cash exposure. So I'm not promoting or I think I'm not promoting any one of this method, but I think for investors, one of the key point here is basically to choose a method that works very well for you, and at the same time to maintain the discipline. When I say the discipline, I think if you have the 1/n rule, then you have to ensure that over time the weight of each asset classes will tend to change depending on the price of the asset, which move over time. So it is important to keep a discipline in order to make sure that the weight remains around the same figure. I mean, if you have like a plus minus 5% buffer, then you allow the asset classes to move plus or minus 5% compared to the 25% weight that you have there. Yeah, I hope I make sense there. Next part, yeah. So this is the resulted, for illustration purpose, this is the resulted asset allocation that you can have. So let's say if you you have a balanced approach. So this is what the allocation for each of the ETF that you have. So you have the ETF Malaysia about 40%, you have ETF for US, which is a proxy to developed market, 30%, and you have ETF for emerging, for China, which is a proxy to emerging markets at about 20%, and the remaining 10% is in gold. Again, please don't take this as an investment advice. I mean, this is just for illustration purpose only, but this is an example of how your asset allocation will look like based on the asset allocation that you choose. And like I said, over time, the weights of each asset classes will change. So it is important that you maintain the discipline to adjust your target weight to ensure that it will not run that far from your target weight. So accessing the ETF, so there's two ways of you to access the ETF. So one of the direct approach is you can take a direct approach. You go to you ask your broker, or you look at the online trading platform to buy into the individual ETF. At the same time, you can also participate into ETF by going through these robo advisory platforms. I think we have a few now in the markets, and these platforms usually have a proprietary algorithm to understand the risk as well, and subsequently allocate your capital based on the risk questionnaires that you mentioned. So in a way, you outsource it to this robo advisory platform. To get the exposure to the ETF. So on this part, like I mentioned, I think in much earlier, ETF is quite transparent. So for each ETF issuer, they normally release release the composition of their ETF in their website, as well as the BURSA, as well as in the exchange website. So you can see all the stock that is being bought here, the sector that is being the sector composition, as well as the weights of each individual stock. So by doing this, you have more transparency as compared to buying into a mutual fund. So you know what you are buying into in a way. Yep, I think that's all from me. Um, Again, feel free to follow our Facebook group, Value Partners Malaysia, and the Twitter group, Value Partners MY, if you have any other questions or you like to get insights on what's going on in the investment world. Let me look if there's any questions. All right, I think taking some of the question here, the first question is, does an ETF provide entitlements or dividends if we invest in the ETF? So I think, again, it depends on the ETF that you are investing in. They do, some of them do provide dividends on a frequent basis. Especially, I think, if you look at some of the dividend-focused ETF, they do have, they do provide regular dividends. So yeah, that's one of your key consideration. Other questions? Thank you. I think one of the questions is, why do some ETF shows no volume or no update? Is it due to a market close? Again, I think it depends on the efficiency of the market makers or the participating dealers, because for the on the secondary market, the market makers will actually key in the bid aspect to ensure that there's volume in the market, and they normally try to minimize the spread to ensure that it tracks the NAV of the fund. Yeah. This one, quite an interesting question. Does the ETF push a particular index higher? I think for the Malaysia case, it's not the case yet. But I think there was some discussion about this, especially on the more developed market, like the US. We can see, like, for the S&P 500, among the top holders of the S&P 500 are the ETF issuer like the BlackRock, Vanguard, and I think what else? Invesco. So they do have an impact, but I think the debate is still ongoing whether or not one causes the other. But definitely for Malaysia, that is not the case yet. And I think the next one is, does ETF cause the company in index composition to have higher valuation? Yeah, again, I think this reflects the same question earlier. So which I don't believe it is happening in Malaysia right now. So if I own ETF, am I shareholder of the underlying company? So if we talk about the plain vanilla ETF where they are doing a full replication strategy, by buying into the ETF, you are definitely owning a fraction of the underlying. So you can in a way say that you are also a shareholder of the underlying companies. So next question is, will the new ETF provide regular dividend distribution or purely on growth? So I assume you are talking, when you say new ETF, you are talking about the ETF that our company is going to launch. So we don't really have any dividend distribution policy. This is because the fund is, like I said, because it is skewed towards the new economic drivers. So first of all, the dividend from the index is very minimal, and we would like to reinvest the dividend into the ETF. This is to ensure that the tracking error is also minimized. Is there an ETF in Malaysia similar to S&P 500 or ETF that invests in the US? I think probably not S&P 500, but we have one, the Dow Jones Islamic Titans US, that invests in the US, but it's traded in ringgit, if I'm not mistaken. There's a question on, do the investors' inflow and outflow actually affect the fund's liquidity? So because the nature of the ETF that is trading on the secondary market as well as the primary market, I believe that there's no effect on the fund's liquidity. So in a way, investors will not be affected the current investors will not be affected if, let's say, there's a big investors that actually make a big redemption from the ETF. So yeah, that's not an issue there. There's a question on, how do we make a profit using ETF? Is it by price increase of the unit or through accrued dividend issued? So again, I think it's very important to understand the features of each of the ETF. So some of them with the dividend focus, so that is where you can get the profit from the dividend. But I think some like us, with no dividend being issued on a regular basis, that is where we look on the long-term capital growth there. So yeah, that's how you try to treat on the ETF. So yeah, I think that's all the question that we have. I would like to thank everyone for joining the session. Again, feel free to connect with me in LinkedIn or follow our Facebook and Twitter page. Enjoy the rest of your session. Thank you.
Welcome to the first virtual BURSA Marketplace Fair. We are glad to have you here. Please watch this short walkthrough video on how to navigate the virtual platform. You are now in the virtual event lobby, where you can navigate to any part of the event. Here, we have our virtual exhibition hall with a lineup of all our exhibitors. This is our agenda for the day. Be sure to attend the sessions you're interested in. Our conference hall pages, where you can navigate across pages or ask questions. Our speaker page with the lineup of all our distinguished speakers. Our event survey page. Be sure to fill this up during or after the event. And here is our giveaway room, where you will be able to win amazing prizes through the giveaway and tournament. For the giveaway, just complete 2 mandatory tasks and a combination of 2 of the additional tasks to stand a chance to win. For the tournament, participate in all the 7 quizzes and stand a chance of winning 500 ringgit, 300 ringgit, or 200 ringgit. Let's return back to the exhibitors. Here, you can chat, video call, or meet up with our exhibitors. Below, you will find all the relevant information from about, to contact details, and their wide range of resources. To participate in the chat, please click on the chat button. This will send a request to the exhibitors to accept your chat. Once the chat has been accepted, it will appear in your direct messages, where you can chat, have a one-on-one video call, and get the representative's details. In your briefcase, you will find all your bookmarked resources and the contact details that you have saved. Be sure to always look at our announcements for the latest happenings. We hope you have a wonderful event.
Good afternoon, ladies and gentlemen. I hope you are well and hope you are staying safe in this current lockdown. First of all, I would like to express my thanks to BURSA Malaysia for organizing this inaugural BURSA Marketplace Fair 2021. And I am Crystal Tay from Sunway Group. It is my pleasure today to spend the Saturday afternoon with you to share some of our thoughts and also observations in the REIT market, as well as I really hope today that what we could do is to bring you to be able to experience and visualize how being an investor of REIT is like, and to bring yourself to imagine yourself as a REIT manager like us, to appreciate the management of properties and where we make our income, where we earn our earnings or rental, and how you can generate investment return from investing in REIT. Before I move on, let me go through the agenda for today. First of all, I will do a brief introduction to REITs for the interest of some of you who may not be very familiar with REITs. Then I will landscape of Malaysia. This part, we have prepared some observations, especially in the last 1.5 years amidst the COVID-19 pandemic, and how it has affected the performance of REITs in Malaysia. And moving on, we also would like to take this opportunity to share with you some of the key observations of new trends, especially during this new normal that we are living in. And we think that this new normal is going to stay for quite a while. So as business owners, we also need to evolve alongside with the new normal and innovate our business and adapt accordingly. And lastly, on the last part of the presentation, we would like to share the outlook. And generally, we think that we will be able to see rainbow again after the storm. So on the first part, introduction to REIT, we would like to take a few minutes here to share what is real estate investment trust. Although REIT has established more than 16 years ago, but I think many investors on street may not be truly familiar with the concept of REIT. And today I would like to take this opportunity to share with you the concept of REIT, and so that you'll be able to appreciate better how today I still get questions from investors or from the general public asking us, how do I invest in REIT? Can I invest in REIT through an agent, just like a mutual trust fund? So let me bring you through what is REIT all about. Okay, essentially, REIT is a collective investment scheme that invests in a portfolio of income-generating real estates. Assets, and with the objective to distribute regular income distribution to unit holders such as you for a regular income and as well as steady income stream. That said, I would like to clarify here, it is regular and steady, but it doesn't mean that the quantum of the distribution or the dividend is also fixed, because at the end of the day, the quantum of the income distribution or the distribution or DP, or in our context we call it DPU, but I think in many people's understanding, it is the dividend that you receive. It is actually tied to the performance of the business. Hence, there is a possibility of the dividend that you receive or the distribution may be higher or lower depending on the performance and depending on market situations. And basically, when you invest in a REIT, what do you get? You actually invest into an indirect access to a large real estate portfolio. And some of this portfolio, I would say it is actually a very, very special in the sense that we will be able to invest as individual, especially you and I, into portfolio of iconic assets. Imagine us owning iconic assets such as KLCC, Sunny Pyramid Mall, the Mid Valley, Mega Mall, the Gardens, the Pavilion Mall. How many of us can actually afford, building and owning such real estates if not we invest through a REIT? And secondly, it is also professionally managed, and it is, in fact, REIT is a highly governed trust or highly governed securities by the trustee, where we have a trustee, which I will explain slightly later, a trustee that oversees the activities of the REIT manager in the best interest of unit holders, the stock exchange themselves, and also regulators such as Securities Commission of Malaysia. So it is actually a highly governed and regulated investment instrument that you are actually investing in. Thirdly, I think this is also a very unique features of investing in REIT is that it is tax transparent in the sense that if a REIT, in the case of all REITs in Malaysia, distribute at least 90% of our distributable income to unit holders, meaning whatever that we earn minus all the expenses, if we distribute 90% of them to unit holders or investors, the REIT at the company level is actually exempt from tax. However, as an individual investors like you and I, we will be subjected to a withholding tax of 10%. This is a typical REIT structure that you will see in most of our websites or annual report. The concept of REIT essentially, it is slightly different. Is a hybrid between equities and mutual funds. And in the case of REIT, where you invest, you will be holding a certain amount of units instead of shares, unlike when you invest in other listed codes. So in this case, it is similar to mutual funds where you get your investment in the form of units. And this investment which you invest in will invest and acquire in a portfolio of properties which will generate income, most of them mostly in the form of rental income. And from the rental income that we generate or we earn will be redistributed to you as dividend or distribution. And if you look at the structure itself, as mentioned earlier, we are governed by the trustee. The REIT is governed by the trustee, which is a body that is appointed to oversee the activities and governance of the REIT manager to ensure that all activities are undertaken in the best interest of the unit holders. And the REIT manager essentially is the corporate REIT manager where we undertake the strategic portion of the business, i.e. in the acquisitions, in the refurbishment, which we normally call it the asset enhancement initiatives. And the day-to-day operations of the properties are managed by the property manager. In some instance, some of the REIT would have another level which is known as sponsor. Sponsor in the layman term is essentially the parent. Most of the time it's actually the parent company or the sponsor that feed or that will have a pipeline of assets to be injected into the REIT when the time is right. So the concept of REIT investment, I would like to bring you to visualize how a REIT will work in a very simplistic manner. Just imagine when you look at this diagram, it is similar to us when we acquire a property, for example, a condominium or a shop lot, where we list it or rent it out to a tenant and we get rental from our tenant. So in this case, as a REIT investor, when you invest in a REIT, the REIT will acquire and owns as well as manages a portfolio of real estate, commercial real estate, and most of the time they are of certain or certain sizes, or including iconic properties such as I mentioned earlier, the Petronas Twin Tower, the Pavilion Mall, the Sunway Pyramid Mall, Sunway Unisys, like what you see here, as well as very large industrial properties as well. And with all these properties in the various subsectors that the REIT invests in, it will earn rental income as well as other income in other instances such as your parking income and many other form of incomes. And with the collective income that the REIT earns, we will distribute income to the investors or unit holders in the form of distribution income or DPU. We call it, you will see dividend per unit when you look at our financial statement. So in this DPU, it is essentially your dividend that we will distribute on a periodic basis. So in this case, it depends on the mandate of the REIT itself. Most of the REITs in Malaysia distribute the income either on a semi-annual or on a quarterly basis. So you will be able to receive this distribution income as mentioned earlier. Hence, we always say it is steady and predictable because you know that every quarter you should be expecting certain amount of dividend or distribution which you will receive in your pockets. And then the other part of the upside or as well as downside potential that you may experience just like any other investors that invest in equity market is potential capital gains or loss that you may be succumbed to. It is actually the price movement, the ups and downs of the price movement. When you add the two together, this is where we talk about the potential total return as a REIT investor that you will earn when you invest in a REIT. So I think that this concept makes it very simple for you to appreciate how a REIT structure or how a REIT investment works. Moving on, why do you or why should we consider investing in a REIT? I think first of all, it is a very simple way of investing, and it is also a low barrier to entry, especially in terms of entry cost, to invest in high quality real estate portfolio. As mentioned jokingly earlier, right? How many of us can afford to own the Petronas Twin Tower or to afford to own a Sunway Pyramid Mall or Sunway Resort Hotel, right? Not many of us. So in this case, this is an opportunity and also an investment instrument where we can have a certain share of investment and also income that they earn by investing in a REIT. So when we get our distribution or our DPU, essentially we are getting the rental sharing from the owners of these mega properties. Secondly is the benefit of it is really the regular income distribution that enables the predictability of a steady or sustainable stream of income. As you know, just now when I mentioned, every REIT manager will declare an income distribution on a regular basis, either on a quarterly or on a semi-annual basis, and it is also predictable in the sense that the dividend policy or the distribution policy will state the distribution payout as well. So in order for REITs to be able to enjoy the tax exemption, all REITs in Malaysia will distribute income to unit holders. So you have two levels of certainty here. The frequency of your DPU or distribution income that you will receive, and secondly is that the payout is also more or less quite predictable because 90% sometimes can vary between 90 to 95 or 90 to 100%. So these two predictability is quite stable and highly certain. But what is not certain is the quantum, because the quantum is correlated with the performance of the business itself. And thirdly, it is also a very liquid proxy to as opposed to physical property investment, because investing in risk is just in any equities listed on the stock exchange. Hence, you will be able to enjoy or to see the daily pricing during the market trading hours. So in terms of liquidity, you can actually trade anytime during the market trade hours, 5 o'clock, unlike when you invest in physical properties. So when, for example, when you wish to dispose or liquidate your real estate, the physical real estate, sometimes it may take you months, or even, if times are bad, it could probably take you more than a year. So in this case, REIT is highly liquid in terms of the comparison. Fourthly, on the fourth point, it is again, would like to share that it is professionally managed by professional REIT manager, and also transparent in terms of disclosure as well as high level of governance. So if you go through our integrated reports or our annual report, you'll be able to see the performance of the assets are all highly transparently shared with you. The performance, for example, the occupancy, as well as the other sections where you will be able to see the corporate governance structures and many more, even in our website. So this is a very professionally managed investment that you will be comfortable with. Moving on to the next page on the landscape, I would like to share some background on the evolution of REIT in the country, as well as I think for you, what you'll be more interested to see is that how have the Malaysian REITs, or we call it M REITs most of the time, in short, performed in the last 1.5 year during the pandemic. I think I would be spending a bit more time on sharing with you some of our observations on the performance of M REITs in the later slides. Essentially, just to share with you the overall landscape of the REIT in Malaysia. Basically, we have two spectrum. The specialized REIT, where these REITs typically invest in specialized sectors, so their mandate will permit them to invest in specific sectors only. For example, if the mandate says office REIT, so then they will only invest in office assets or office commercial properties, industrial, retail only, for example, healthcare, hospitality. These are the various specialized REIT that we have in the country at this moment. In the past, we have other specialized REITs, for example, patient REITs, if you can recall, many years ago, which has been delisted. And the diversified REIT spectrum, we will have REITs that is permitted to invest in a portfolio or a basket of different subsectors. For example, in the case of Sunway REIT and Al Salam REIT are typically the two of the pretty well diversified REITs in the country, with exposure to various subsectors such as the retail segment, the hotel or hospitality segment, the office segment. In the case of REIT, we also have the services which invest in healthcare and education assets, as well as industrial assets. So it is actually a very well diversified portfolio. Where else? It's also interesting to share that Capital Land, or CMMT, right, it has also recently secured a mandate from their unit holders to allow also move into diversified REIT. Capital Land in the past was, when they first listed in the first 15 years, it was retail REIT. In this year, they have actually taken the mandate to actually provide flexibility for them to invest in other asset classes as well, similar to the Sunway REIT and Al Salam REIT. We also have a group of REITs in the country which are essentially diversified, but because by virtue of their exposure in certain segments which are relatively large, for example, then we call them the retail. We call them the focus, diversified within a segment focus. For example, Pavilion is a diversified REIT within a retail focus, because bulk of their portfolio is actually invested in retail malls, with a small component of office assets which they have. As for Axis, which we all know very well, they are one of the best and the most successful industrial REIT in the country, and the first REIT listed in the country. In fact, they have very large and sizable portfolio. At the moment, if I am not wrong, I think their total number of properties have grown to 53 properties. Since they are listing in 2005, and primarily they are invested in industrial type of assets such as the logistic warehouses, manufacturing facilities, but with certain exposure to office as well. So they are known as the industrial focus, and of course the office focus. For example, KLCC is a staple REIT as well. They are invested in office portfolios, as well as small exposure in hotel as well. Moving on to the next page, I would like to share with you some key observations of how the industry, or the MREIT industry, have performed in the last decade, since the start of the REIT market in 2005. If you look at the bottom of the diagram, REIT was established in 2005. As at December 2005, the market cap stood at less than R1 billion. And at the end of December 2019, you can see that it has grown by leaps and bounds to 43.4 billion ringgit And of course, since then, after that in January 2020, we start to experience the pandemic, which hit the global, which hit us globally towards the end of January. And since then till to date, as at 30th June, the market cap stood at 37.6 billion ringgit. It has actually lost about 9% in terms of the market cap since the COVID-19 pandemic. And if you look at the top portion of the chart, this is all the REITs that is listed. These are all the listed REITs in Malaysia, with a total of 17 REITs, with KLCC Staple Group being the largest, followed by IGB REIT and Sunway REIT. And it is a wide spectrum of sizable market cap to also some of the smallish REITs in the country, and across a diversified spectrum of property or asset classes or property subsectors. Okay. I think where you will be interested is looking at this chart. And if you look at this chart, what it tells us essentially is this is a total return chart. How it is computed is really from the dividend yield that we compute. Basically, what it is if you invest in FD, fixed deposits, usually you will look at your return, right? Whereby where you talk about earning 3% or 4% or whatever in some other instruments. So in the case of REIT, the primary return that we usually look at, or the core return that we prioritize, is the dividend yield. So in this case, in the Malaysian context, historically, the average yield of the industry will range between the 5% averagely to as high as maybe 7% during the initial years. So this is typically the return that you should be expecting as an investor. And thereafter, just now I mentioned the capital gain and capital loss. This is the potential upside or potential downside of the unit price, meaning in the normal equity, it is the movement of your share price. So when we add the two together, that is the total return that we are talking about. So in this chart, we compute from the beginning of this year until June. In the last 6 months of the performance, the average return of MREITs is around 5%. And what it tells you in this chart as well is that the majority of the return, right, or averagely, actually, the price have been pretty stable. On average, of course, we see the ups and downs in the price, which is shown in the red bar. And you see that it's also interesting to observe that certain segments are actually suffered or are actually adversely impacted by the current COVID-19 pandemic. And I think it is not rocket science that you also know what are these sectors. So typically, it is sectors that are affected by the lockdown. When there is movement control orders being implemented by the government, most of the time, two sectors are the worst hit in the current environment, one being the hospitality or hotel, because most of the time they are not permitted to continue to do business as usual. And if some of these hotels are fortunate, they may continue to operate as quarantine centers for the people who need to be quarantined. Other than that, most of them are not able to operate and accept hotel guests during this period of time, especially during the MCO periods. Like in the context of retail malls, retail mall over the last 1.5 years have also gone through several phases of movement controls from the MCO, FMCO, or even now this MCO, where only the essential services are allowed to. So the rest of the time are able to do business as usual. So that explains why those REITs with heavier exposure to retail segment as well as to the hotel segment are badly affected during the 1.5 years. Whereas if you look at the left side, right, the sectors which are relatively less impacted are office, because most of the office tenants are still able to operate with their employees practicing working from home arrangements. So it is, although not business as usual, but it is, they are still able, many of the business are still able to operate, unlike the hotels. Secondly, for the, if we talk about the rising star during this period, is definitely the industrial logistic warehouses players such as the Atrium REIT, Axis REIT, because they are actually enjoying, they are enjoying another phase of growth, whereby later we will be discussing on the trends where the growth of e-commerce, for example, typically lead to higher demand for industrial type of assets. We will discuss that later in the later slides. Okay, this again, I would like to show you a landscape or some observations of the typical performance, historical performance of REIT in the past. The blue line shows the distribution yield, which I shared with you earlier. In the last 5 years or so, it ranges between the 5% to 6%. During the earlier part of the cycle where REIT were, maybe if you recall, in the 2010 or 2010, 2040, some REITs were generating as high as 7, if not close to 8% return. So depending on the time frame, but in the last couple of years, it has been hovering between the 5% to 6%. Actually, the REIT line is the one that shows the capital gains or loss, meaning the unit price movement, which you see in 2016. The average price movement was around 8.8%. So if you are an investor of REIT in 2016, your total return for the year is average around 15%. And moving on to 2017, the average return is about 18%. In 2018, it was a negative return. Actually, back then, it was the negative movement in price was primarily driven the fact or the expectation of an interest rate, which didn't really happen. But the price movement actually reflected the expectation, and hence REIT actually came down during that period of time. And then if I fast forward to the right-hand corner of the graph, you will see that in 2020 and 2021, where during the COVID period, we saw the price have actually corrected quite a bit. And also the total return have actually came down quite a bit as well. In terms of the distribution yield, if you look at it, it has also came down slightly. And the reason for this lower distribution is because, as you know, some of the business are not doing as well as before. And our rental, some of the rental of the properties hence the income came down, and hence our ability to distribute dividend also has been affected. But if I may bring you to the next slide, which is the next graph, which is interesting, and what message does it also tell us is that, in my opinion, if we look at the period between essentially the COVID period, which I used between the beginning of January 2020 all the way to current situation, see that the total returns of some of the REITs in the country, including very iconic REITs, very large, sizable REITs, which are well invested by foreign investors, have actually corrected quite sharply. And if I may use the term, it has also been corrected quite substantially. So what it's telling us is that I think the total return or the performance being the return are all the that we have been in, and also it is also being discounted. If I may show you that investors are investing at a lower level. And if you believe that, I will share some of our outlook later. If you believe that some of these sectors or some of these very high quality REITs will eventually recur, to pre-COVID level, be it in the next 1 year, 2 years, 3 years, then it is also means that an opportunity for you to really consider, REIT as an investment in your portfolio as well. So on the last observation, which is it is a bit technical, but I think in terms of for investors like you, sometimes when you look at other counters or other stocks in the market, we will look at PE valuations, for example. We will also look at valuations such as price to book or price to NTA. And usually if we look at low PE or companies with huge discount to NTA, we will think that these companies may present certain value to investors, which has been very largely discounted by the market. So in the context of REIT, how we read into this observation or evaluation analysis is that we look at the price, which is the market price, versus your price to end to your book value. So when you look at this, you will see that sometimes, or in the good old days, many of the REITs are trading at the premium to the NAV, meaning the price is higher than NAV. And there are certain REITs that are trading at the discount to NAV. But it is interesting to share in this chart is that we have computed the green color is the pre-COVID level, which is end of December, the premium to NAV valuation before COVID, and also what is the valuation like in today's context. So we took the June number, the price over NAV, which is represented in red. You will see that with the exception of which has been always trading at very, very good premium, even though it's dropped slightly. The rest of the REIT in Malaysia, you see that the premium or discount to NAV has actually has been discounted further. I share with you one very good example of Sunway REIT. Is because in the past, over the many years, it has always been trading in a premium to NAV situation. Likewise, I think if you look at Pavilion REIT, it is trading at very attractive premium levels, such as like the 30%, the 20%. It has been quite an average over that kind of range for a long time. And in recent time, when you look at the current situation, Sunway REIT, for example, from a premium of 22%, today it is trading at negative 3.5. It is actually trading at a discount to NAV level. And what it tells you is that the price has been affected by the situation of the COVID situation. For example, if your portfolio is exposure, we also have exposure to the hotel segment. So net business performance have been affected by these two segments, and it is also being reflected in the unit price. But what does this chart essentially sending across to us is that if these are good companies, if they are good REITs with quality assets, and we believe that post-COVID situation, the market will recover, the performance of these properties will also eventually recover. It also signals to you that when good assets are trading or good trading at substantial discount, it may also present an opportunity to you as an investor. Okay, the third part, I will move on a little to share the new normal and how in affecting as well as how has it been affecting the REIT market especially. So I would like to share this page with you. I don't know how many of you, when you see this, it is familiar to you. As for me, this is a daily, I would say a daily scenario at home. When I work from home, my children go attend online classes, and we very regularly have a lot of online meetings. And from time to time when we're free, Shopee is our best friend nowadays. And the most frequent visitors during lockdown when our family members, friends cannot visit us, the people who visited us the most are the DHL, the Post Laju, and also Mr. Greg. So this has become a new norm to us, and this is also being embedded into our life. And I think I would say that this new trend will not disappear overnight, assuming hypothetically at the end, when the COVID pandemic subsides. Does this mean that this trend will disappear as well? We think that it will not, because we are slowly getting, or very quickly for some of us, getting used to the new norm, and we believe that the new norm is here to stay. And when you expect, as business owners, when we expect the new norm is here to stay, naturally, we will also have to adapt to the new norm. And if you look at business environment in general, I think it is very interesting in the last 1.5 years, how business owners have been able to very quickly adapt, innovate, and also accelerate their digital adaptation, even to from small, I would say from very, very small scale business owners to large corporates like listed entities as well. So I think that interesting observation, for example, right, many of us, start buying groceries, perishable goods, meat, seafoods through social media. I think prior to COVID, you don't see as many Instagram pages that promotes seafood pages, but today if you go in, you see so many of these people, promoting, or they are selling or marketing food, meat, seafood, and even I think in the recent trend, durian as well. You see so many people, you can order durian over Instagram. And in the other businesses, on the bigger scale type of businesses, for example, in the context of REIT, including in the context of property developer, for example, during periods of lockdown where we cannot meet customers, it doesn't mean that our business stop. And when our business stop, what happens is that we will not have the capacity or ability to pay you dividend or distribution anymore. You have to think out of the box. And in the last 1.5 years, we see more and more companies or REIT, even property developers coming out with virtual property viewing, which is quite realistic if you go into some of the websites. World property leasing, whereby our leasing colleagues actually market their products through a virtual platform as well. In fact, it is also interesting to see that even on the healthcare side, hospitals are moving into teleconsultation and virtual consultation, whereby some of us may not, for some of our regular checkups, or for very minimal illnesses, for example, fever, we may not feel comfortable to walk into a hospital at this juncture because of the COVID situation. You can actually now make an appointment virtually, and meet your physicians virtually for a basic consultation. So even hospitals have also innovated to that level. And during the lockdown period, what happens to tenants who cannot operate? So some of these tenants also have started services whereby you can go to their website and chat with them. Or I think many of us are also familiar with some of our sales assistants, which used to be in the mall, for example, let's say in Sunway Pyramid where I work, then some of the tenants whom we usually shop at, right, we will communicate with the sales assistants via WhatsApps, and they became the personal shopper to us, and we can still arrange for purchases in a different way during the closure of the shops itself, of the physical shops. As for hotels, they are also, thinking out of the box, and you get to high quality hotel food, which usually in the past we would have to dine in. Of course, dining in has the ambiance as well for dining in a hotel. But in today's context, in the absence of the luxury to dine in hotels, we still have the luxury to have hotel quality food delivered and sent to us. I think you see a lot of that in the social media as well. And a shopping mall, in addition to the usual food delivery services that we have, for example, our Foodpanda, our Grab, some of the shopping mall owners also have their own initiatives whereby you can order and collect by driving through, just like McDonald's. So several shopping malls have also started that services where you can still enjoy the food by picking up through a drive-through. And here, when we look at the REIT in general, the REIT context, I think before COVID, some of us or many of you investors could be asking us about oversupply situation. You ask about disruptions, how does disruptions or e-commerce will affect our business? And today, we also have another new element as the COVID factor. So with all this, in fact, it is not new to us, and we know for a fact that REITs will need to evolve and need to innovate to embrace the new emerging trends. If we stay where we are, just like how we used to do business 10 years ago, we know that we will be struggling. So if you look at over in the next few pages, we would like to share with you, some of the trends, emerging trends, and how REITs can actually embrace these new emerging trends, bring it to customers, bring it to our guests, and you will continue to come and patronize our malls. Or it could be new business model a mall can venture into. So a mall in the future may not be exactly the same as a retail mall, say 10 years ago. And in the past, a lot of times when we talk about innovations or refreshment of tenancies, where you change tenancy from time to time, you bring in new brands, you bring in new tenants into the shop to refresh the appeal of the shopping mall. But in today's context, I think we are looking beyond that. And some of the examples that I would like to share with you here, it's already happening either in Malaysia or in a global context. So for example, to ensure that, with the growth of e-commerce and online, and increasingly many of us, has this habit of shopping online, and I don't know, maybe Shopee becomes our best friend, or Lazada or Zalora. For a mall to remain relevant and for you to continue to patronize a mall, we must make sure that there is attraction and there's reason for you to continue coming to visit the mall. I mean, of course, not during the EMCO period, but we are looking beyond that. So one of the concept is that it has to be a destination retail where you have interesting tenants, interesting enough that you and I will make the effort to visit the shopping mall on a regular basis, hopefully. For example, I think the recent trend is in Isetan, the Don Don Donki, where people actually go and queue. I was told before the lockdown, you may need to queue as long as 1 hour before you get in. And because of the varieties and the attractiveness of Don Don Donki there, you probably spend another few hours in the mall, and then thereafter you will do other things like dining and etc. in the mall. So this is one type of tenants. It will be important for the malls continue to attract footfall and sales, retail sales to the landlord. So the first one is destination retail. Secondly is experiential retail. Experiential retail, we actually have quite a number of plenty in Malaysia as well. I would say in Malaysian context, it is still at the infancy stage and has got room for growth or to be more innovative or creative. For example, if you notice in Innisfree, you have your VR, the virtual reality screen where you can cycle alongside with your favorite K-pop being BTS or any other K-pop. So those are some of them, and I think in some of the F&B outlets where you have robotic services that serve to you. So these are some of the little ones that we have seen. But in the overseas context, such as China, they are a lot more innovative, and these are the gimmick, if you may say, the gimmick that will attract you to come, especially the young generation where selfie photo. So this is also very important because we need to share the latest trend of what we know, what Instagram is. So we'll keep for to visit the tenants. In this case, I personally like this, and I find it interesting in Korea. Conducting hotels actually as is a fashion retail that sell market fashion, some cosmetics, and a little cafe. How they have and this residential retail into a tourist destination as well, which is very successful. Is the whole concept store has been converted into a hotel alike, and it is pink. So females like me, we like flamingos, we like pink, we like unicorns. So it becomes an instant attraction that we would want to go there and check it out and take photos. So, and they have also very intelligently put in the attractions like everything is pink, the tops, and then and it is highly as well. So this is experiential retail that if they are successfully done, it can also becomes a destination retail as well as what do you call it, tour attraction. And thirdly, hybrid retailing. Hybrid retailing, what it means here is eventually we know that over the longer term, we need to embrace both the online and offline side of the business, the online and the physical side of the business, where before COVID, we have seen quite a number of tenants that have moved from online to offline, including Alibaba. If you see in the context of Alibaba, which has turned from online to their offline, where they have the Hema supermarket store, and including in local context as well. We have also seen several tenants such as Christy Ng, who specializes in shoes, for example. They have also turned from online to offline. But over time, we feel that with our recent experience in the 1.5 years, the physical mall owners such as REIT also will eventually consider a hybrid model whereby an online platform is also necessary for us to provide an additional or an alternative trading platform for our tenants. So it is a facilitation type of services with last mile delivery possibly, where you as a tenant may choose to shop at the mall. If you do need to carry your shopping bags, we can actually, you imagine after purchasing your product online, after purchasing your product at the mall, or at the mall, if you could not find certain range on design, you can go to the online form and settle your bill at the mall, and before you reach home, the next thing you know that the last mile delivery could have or would have sent your product to your home. So these are the future retail trend that we think that it will happen over the next few years, in order for REIT to embrace on the new trends, as well as how do we compete or work alongside with disruptors or e-commerce business. The next one is retail, with more and more shopping malls in the country. As you know, shopping or retail mall will not only be sufficient if they maintain the kind of tenancy in the past. So where they need to innovate is also bringing other elements which online, you cannot feel it online shopping, for example, experiential, entertaining, education as well. So where we see that evolution of more different types of retail come into the picture over time. And I think we have seen some of this, like for example, wall climbing, District 21, and many others. One of the latest trend is on cloud kitchen, whereby it is the concept of a combination of family outlets where they are how does it work if you wonder where not need to come to the mall to collect the food for the food delivery. Instead, they go to the cloud kitchen. Secondly is, imagine a F&B tenant where they can free up their kitchen space, and then the kitchen space turn into a dining space, and where we can sit down and dine. That probably will bring them more revenue by having more space for customers to dine in. So some of these are possible for F&B tenants to consider over the longer term. Quickly moving on to offices, I think on the office, it is work home experience that we had in the last 1.5 years, where we see the office segment moving into, is that I think green and MSC status, high spec buildings are essential, because more and more of us are moving into virtual meetings, and I think connectivity bandwidth becomes a necessity instead of luxury. Beyond that, with office segments, you may be thinking, oh, some of these offices may eventually opt for a flexible working arrangement whereby they allow some of their staff or employees to work from home. That is possible over the longer term. So where we see it, the office segment may evolve is that where more and more may consider going into co-working and communal living, where it is co-living spaces. And we already see that in Singapore, for example. In this photo, it is the Funan Center, whereby this integrated development consists of shopping, retail, a very large co-working operator, as well as a co-living operator, all in one. And this type of concept is good, because the co-working space whereby the population will become a natural fit of retail food to the retail mall, because when you will need to dine in a shopping mall as well. And moving on, the workspace as well. I think workspace is function in workspace, unlike our previous type of cubicle or rooms. I think post-COVID situations, employers will start rethinking about the workspace requirement and take into or longer-term new normal. We may need to have distancing or hence of this design our tenants. Of course, in some context, with more innovative kind of office tenant space, which can be utilized, is having leisure and recreational facilities. In this case, in this example, this building even have a football field at the rooftop, and also collaborative spaces for functions, events, where tenants can join at the facilities space. So an office in the future will no longer be a typical office that we used to see in today's context. Very quickly, moving on to the hotel segment. Hotel segment during this lull period, I think to position properties for the point in and then the new of consumers or guests arising from our lifestyle changes, and also changes of the newer. So in this, for example, the hotel whereby the kids room or the kids suite, they have facilities like the PS4 now. I know which series is those available in the if they do not continue reading, and some have decided to go on. And this is a basic type of rooms for business travelers most of the time. And of course, bringing in gastronomical experiences to the hotels, for example, in the upon the completion of the refreshment in second half of this year, we will be introducing national culinary restaurant, which is Golden Sunway Resort Hotel. And this also, when they are successful, it is not only a destination for local, but also attract international travelers to come and stay at the hotel. And of course, moving on very quickly, some of the reinvention will also looking into rebranding of their hotel, for example, into sustainability-driven type of hotels, or into luxury resorts for the lifestyle experience of the traveling guests. Okay. On the emerging market, so for the emerging market, I think the e-commerce and also with digitalization and the move was higher and higher digitalization amongst many of us, not only in businesses but in our daily life. These are some of the emerging for the other sectors. For example, looking to build to suit for tenants. The rise of demand for logistic warehouses, integrated warehouses, also with the growing global mega of inflation, for higher quality of education as well as higher quality of will also lead to higher demand of healthcare services, education institutions, and all these actually provide an avenue or opportunities for of course the data centers and student accommodations as well in the future. I would quickly move on to the last part of it. Rainbow comes after the storm. As we have gone through the storm over the last 1.5 years, in the interest of time, I will very quickly go through the short-term, the summary. We will share with you so you can actually go through the details of it in your leisure time. But essentially, I think retail in the short form, it is going to remain very challenging. Medium to longer term, we think that with the herd immunity, eventually retail segment will recover pretty strongly, which we have seen in a short period of windows last year during the RMCO period because of revenge spending. And I think or consumption is something that we cannot live without if we still have a job. Of the control order, and more importantly is the herd immunity. Over the longer term period, retail segment will make a comeback. As for hotel, in the I think like mentioned just now, it's also the best time for hotels to undertake refurbishment activities. And going beyond, it's a matter of time, and the or domestic travels boundary reopens. Many of us who have been stuck for many months would be looking for opportunities for our Cuti Malaysia whilst we are still locked down from not able to travel overseas. And for the overseas money that has, people who have gone overseas to your Hokkaido, Switzerland, or Santorini in the past, where you're still being locked down here, when our interstate reopens, you will probably still travel within Malaysia, Cuti Malaysia, and this will benefit, the tourism, the hotel sector in the country, because instead of flowing out to your Hokkaido, it is now being spent locally in Malaysia. But of course, on the longer term, we think that the resurgence of international traveling for both business and leisure is expected to resume one day. It cannot stay here forever to perpetuity. So with that, over the longer term, the sector will recover definitely, albeit at a gradual pace. And office, I have just shared with you earlier. So working from home may eventually cause a little bit shift in the demand mechanics, but the landlord will also have to innovate in terms of their offerings. Lastly, here on the industry and services, this is the sunrise industry, where we call it, rising on global mega trend, and also on the boom of e-commerce, logistics centers, data centers are all in the sunrise industries. they will continue to be in demand. So with that, with very little time, I apologize. I would like to open the line for Q&A. You have any question for us? Okay, I see the questions. I think essentially, if I may group some of the questions together, right? On the retail side, okay. This is an interesting question which I would like to share. It says that retail REIT is badly affected during MCO or EMCO, where most stores in the malls are not allowed to be fully open, still in view of low DPU? This is a very interesting question, and I would like to address this question to share with the rest of the audience as well. If you are very right to say that, at this moment, our income has been affected, and the rental has also been affected by virtue of the loss of income from our tenants. But I would like to bring you to this question and fast forward, imagine, we bring ourselves to imagine eventual opening of or the end of EMCO. Yes, you are right to say that it may not be this month, it may not be next month, but fast forward to bring us 1 year down the road, where more and more of us are vaccinated, and the economy cannot be closed for a prolonged period because it is very detrimental to the social and economic side of the country as well. So with that, if you are a longer term investor and you are able to have a certain holding period, I would think that this is probably one of the best time to start considering looking at some of the well-managed retail-centric REITs, because like some of the shopping malls in the country are really iconic, and they are just a handful of them who used to do very, very well in the past, in a way untouchable. We have never seen occupancy dropping or income dropping for some of these malls. So ask ourselves, if when things recover, say 1 year down the road, do you think these malls or the performance will improve as well? If the answer is yes, they will recover, and they may recover quite strongly as well. And then that is the answer for us, because if we hold the view that they will recover, it means that our DPU will also eventually recover. So it's a matter of time, and it's a matter of your investment horizon, how long you can hold on. And although I'm a crystal, but I'm not a crystal ball, so I will not be able to share like exactly where you can time the market so perfectly that you are investing at the rock bottom of the cycle, or you are investing on the last day of EMCO. It's not possible. So where we can suggest is that start monitoring, start looking at some of the patterns or trends that help you to make or assist you to make some informed decision making, and good or well managed high quality REITs as the retail REITs if you're looking at. So if I apologize for the time. In the interest of time, I will not be able to take all the questions, but what I'll suggest is that my contact is actually in the presentation deck. Please feel free to email us, and we will get back to you and share more of our sharings and also our views with you. And with that, I would like to thank BURSA Malaysia and thank all of you for your time today, spending this Saturday afternoon with us. Thank you very much for your participation. Stay safe and take care.
Hello, and a very good afternoon to everyone listening live today. Welcome to this virtual BURSA Marketplace Fair. Hope everyone is well and staying safe in these COVID times. Now, before I start today, I would like to thank BURSA Malaysia for this invitation to speak in an inaugural virtual marketplace fair. So, are you struggling to choose between saving or investing? Would you like to enhance your financial literacy and learn how to build a solid financial foundation? Yes. So in this session, we will be actually talking about investing literacy, and I will also be speaking about a bonus topic, which is financial fraud and financial scams. So before I begin, a brief introduction about my company. Corpus Advisory was founded in May 2014. We are a financial planning firm licensed by the Securities Commission of Malaysia, and we provide comprehensive financial planning services to help individuals and corporations achieve their financial goals. So you can see our tagline there, beyond financial planning. So what do you mean by beyond financial planning? It's because we go beyond only providing core or common financial planning services such as cash flow, wealth management, risk management, taxes, and even estate planning services. But we deliver comprehensive financial and life solutions through our integrated financial planning services, which emphasizes on helping our clients to find their return on life. So in short, we want to help our clients find the best way, the best life possible, okay, with the money that they have. All right, just before I start, a brief introduction of myself. I'm a licensed financial planner, as you know, with Corpus Advisory, Sandra Berhad, and I'm also a certified financial training professional. I hold some capital market services representatives license from the Securities Commission of Malaysia. I have exposure spanning diverse sectors, including financial planning, training and development, academia and research, finance, human resources, general and also business development. I have a professional doctorate. I'm focusing on the area of financial capability and financial wellness of Malaysians. And as a firm believer of holistic financial planning, I place importance on helping my clients make the best lifestyle choices to help them build a financially healthy and wealthy mindset so that they can realize their life goals and achieve long-term financial success. Just a little bit about Sensibility. Sensibility is a financial and investment literacy program which is brought to you by BURSA Malaysia. And as with any investment talks, okay, the disclaimer. So this session is for general information purposes only, and it does not constitute any legal, financial, trading, or investment advice. It also does not make any recommendation or endorsement regarding any or all products mentioned in this session. You are advised to seek independent advice from a licensed financial planner or a financial advisor before taking any action based on the information presented here. So all the examples and views expressed are entirely my own, and BURSA Malaysia and myself, we do not accept any liability for the information provided during the presentation and in the presentation slides. Well, now the disclaimer is done. So let's move on to our session today proper. So many of you who are not in the investment foray but are keen on the same tend to have many questions on what is investment and how to go about it. So amongst the questions that you may wonder about are like things such as how much money does one need to start investing? Or where am I going to invest my money? Or if you want to buy stock, what type of stock does one buy? And what kind of income can one derive from such investments? Is it dividend? And if it's dividend, what is dividend? So this kind of questions can be mind-boggling. Now that one have more or less decided to start on the investment journey, so the next train of thought are like, where do I go and seek information to start trading in the market? Do I ask my friends? Or do I get the information via the internet, since internet has become the go-to site for many of our questions? But the question is, can we solely rely on the information that we get from the internet? Is it legit? Many a times, the fact that you are putting your savings or hard-earned money at risk is often enough to scare people away from investing. But let me tell you today, investing is not as difficult as it may seem. Okay? But before we go further, okay, I would like to also just briefly tell you the difference between savings and investing. Okay, here, I would like to share with you the difference between saving and investing. So what is saving? Saving simply means putting aside some of our money for use or purchase, for future use or for purchase. Okay, so we will have actually easy access to the cash with minimum or no risk at all. Now, on the other hand, investing, okay, is about buying into stocks, into bonds, into gold, real estate, any form of investment with the view of making money. So investing basically enables us to achieve long-term financial goal. All right, let us look at an example. All right, consider this. You set aside, say, 200 ringgit in your savings, okay, in your savings account for 10 years. So about 2% now, I think it's about fixed deposit rate, okay, and after 10 years, okay, at an annual interest rate of 2%, you will make 43.80 cents from the 200 capital that you have actually invested. Okay, so at the end of 10 years, you will have 243 ringgit and 80 cents. Okay, now taking into account Malaysia's expected inflation rate in 2021 to average about 2.1%. So what do you think is happening to your money? You are investing at 2%, but the inflation rate is actually higher than your returns, the returns that you're getting, the interest that you're getting. So we know that when inflation strikes, the cost of goods will go up and our purchasing power will drop. So therefore, when interest rate is lower, like in this case, 2%, then our inflation rate, which is 2.1% or maybe higher, so we are actually effectively losing purchasing power. So what does that mean? That simply means that at any time your savings don't grow at the same rate as inflation, you will effectively lose money. So now we know inflation tends to eat into our purchasing power over time. And fortunately, there are ways of preserving the purchasing power of your savings. So look at the second option. Should you have invested the same amount in an exchange-listed product such as a REIT or real estate investment trust with a projected annual payout of 6%? Now, at the end of 10 years, you would have made 158 ringgit.17 cents and a total of 358 ringgit.17 at the end of 10 years. Okay, that is with your principal included. So what you're doing now is effectively investing in an asset class, which is a REIT that beats the inflation rate. So this is the difference between saving and investing and how investing can help us beat inflation. Okay. Why do we invest? We have to ask ourselves this question first. Why do we want to invest? What is our goal of investing? So basically, we invest for various reasons. So before you actually start on your investing journey, you have to sit down and think, what is your goal for these investments? Okay, some of us invest to increase our current income level. So you're perhaps interested, to get some passive income, for example. We want to grow our monthly income by investing. Okay, some of us maybe want to achieve certain financial goals. Perhaps, you're actually saving and investing to buy a house, to buy a car. You're saving and investing to retire early. All right. Now, when we are investing to beat inflation and earning the above the average rate of inflation, we are growing our money, and that will help us to achieve our financial goal. So investing will help us achieve our financial goals. It will also improve our standards of living and grow our nest egg so we can have a comfortable retirement. So before you start on your investment, think of the reason. Why are you investing? Why is investing important? Like, investing is an important consideration for various reasons that I've mentioned earlier in the session. So we know that inflation reduces the value of our money over the years, right? Hence, by investing, you are able to continue with your lifestyle in terms of being able to afford the same number of things in future similar to today. Now, investing also makes your money work for you through compounding. So what is compounding? Compounding simply means you are reinvesting your returns to earn additional returns. So it is interest on interest. So it is important for you to know that the earlier you start investing, the more benefit that you will derive from the compounding effect. Now, when we talk about investment, what is investment? What is the definition of investment? Okay, the man here is Benjamin Graham, and he is known as the father of value investing. And he is actually Warren Buffett's mentor. So what does he have to say about investment? What is his definition of investment? Benjamin Graham says that investment is one upon a thorough research promises both the safety of, number one, your principal, and number two, giving you an adequate return. And Benjamin Graham says that if any investments that do not meet these requirements, they are basically speculative in nature. So the way to start investing is via proper research and analysis and not based on hearsay or speculation. Please be informed that there is no one perfect portfolio for each and every one of us. So in order to understand investor, so the next question perhaps, you want to start investing, then the next question that you may ask is, okay, what kind of portfolio can I actually come up with? What kind of portfolio should I have? Okay, you need to create your portfolio based on the following. Number one, okay, it is important for you to understand your own risk preference or your appetite. It is important for you to know your risk preference in order to determine the type of investment that is suitable for you. Number two, you need to know your investment time horizon. How long can your capital be used for the investment? And when will you need this cash that you have set aside for investment? So for short-term goals, you have short-term investments, medium-term goals, medium-term investments, and if it is a long-term goal, okay, you have a long runway, say, towards your retirement, therefore you can actually invest on longer-term investments. And also you need to know the amount of capital that you should set aside or can set aside for investment, something you can afford, okay, something that you have after you save, okay, you have actually shored up your emergency funds, you have paid off most of your high interest debts, okay, therefore you come and start investing. So you need to know how much of capital that you can set aside. All right, before you start on your investment journey, let us understand the role of the Stock Exchange of Malaysia, that is BURSA Malaysia. Now, BURSA Malaysia basically wears two hats. One, they are the market operator, okay, where it facilitates trading and provides infrastructure for fundraising. Now, BURSA is also the frontline regulator where rules are enforced upon the listed entities and market intermediaries to ensure a fair and orderly marketplace. Okay? And the other role that BURSA plays is the role of a listed entity, and it creates value for its shareholders. So BURSA Malaysia is listed on the main market, and hence it is important that the company, okay, that is BURSA Malaysia, is always well managed to ensure returns for their shareholders. So if you actually go to the main market and you look up BURSA Malaysia, you can actually be a shareholder of BURSA Malaysia. Now, why does one buy shares? So we buy shares to enjoy two types of income. Okay, so what are these two types of income? Yes, the first one is what we call our passive income, which is the dividends. So you get returns in the form of dividends if you keep your shares over a certain period of time. Okay, some investors prefer to buy dividend-paying companies and just keep them over a long period to enjoy this passive income. Of course, over time, there is capital appreciation also. Okay, and alternatively, you can buy and sell shares to enjoy the capital gains. That is, what is capital gains? You buy low and sell the share at a higher price and capitalize on that gains. So, if say now you want to invest in BURSA Malaysia listed shares, so what do you need to do? The first thing you need to do is to open a trading and CDS account with a participating organization, or brokers. So who are these brokers? They are basically market intermediaries. Brokers are licensed by the Securities Commission of Malaysia and regulated by BURSA Malaysia. So always deal with licensed brokers. Okay, so what do these stockbrokers do? They facilitate the buying and selling of shares. All right, and then what else? You can also trade online by putting in the orders directly into the system. That means once you have actually opened your CDS account with a participating broker, a licensed broker, then you can actually choose to either trade online or offline. So if it's online, basically you're inputting the orders directly into the platform, okay? Or if you have the option of putting your orders through a remiser or dealer representative, that will be what we call the offline trading platform. So the question is today, why people still engage with offline or remisers? Some investors basically, they prefer to trade with remisers or dealer representatives for the relationship that they have, and also for the extra services that may come along with it. So for example, it's like you're calling your remiser, and you can both discuss about the stock that you have researched and you are also keen to purchase, okay? And at the same time, you like to seek some views from your remiser, okay? So that is one of the benefits, okay, of actually trading offline, that is to go through a remiser. Now, as I mentioned, brokers are monitored by the exchange and they are required to have adequate funding, and also the exchange will ensure that they have proper corporate governance. Okay, so always deal with licensed participating organizations or brokers. So the next question that may come on your mind is, where do I go? Okay, who are these licensed participating organizations or brokers? There you are. So these are the list of licensed retail brokers partners that service retail clients like you and me. Okay, actually in Malaysia, we have 30 brokers, but 23 of them are what we call retail brokers. That means servicing individuals rather than institutional. Okay, so foreign brokers, the 7 of them which are not listed here, they only service institutional clients. But if you plan to open a CDS account, okay, you can approach any of these 23 brokers. Now, you may wish to open a trading and CDS account with any of these 23 brokers, or you can even choose to open accounts with more than one broker. It is not limited to one broker. You can have one account, say, with CGS CIMB, another one with RHB, and another one with Kenanga. Okay, it's your wish. All right? You will only need to pay 10 ringgit. 10 ringgit for each CDS account opening. And sometimes this 10 ringgit is even waived, by certain brokers. Now, how do you decide on which broker to engage? Well, call them up, research about that. Find out about the type of services that they offer and the fees that they impose before you open the account with them. So the fees, the brokerage fees normally will vary between 0.035% to about 0.6%. Okay, so do your research before you make your decisions. Yeah. Now, at the bottom of the slide, you can actually see the link there. So you can actually visit bursamarketplace.com, okay, to view the list of brokers. Okay, so 23 brokers here. Now, let us now go into the principles, the basic principles of share trading. Very basic. Now, it is important to set a target selling price when you buy shares, if you're actually planning to go for the capital gains, okay, unless you want to keep it, or just keep it in your account for long term to enjoy the passive income. Otherwise, always have a target selling price. Now, in this case, just a simple example. Now, you're an investor here, and you are keen on a company called ABC. Okay, so you buy 1,000 shares of ABC at 90 cents. Okay, so now you become a shareholder of ABC. Okay, you own the share of company ABC, therefore you become the shareholder of ABC. So what kind of costs have you incurred? Just an overview. Okay, you can see here you have the transaction cost, which is like your brokerage fee. The brokerage will actually depends on the rate charged by your broker. The clearing fee and stamp fee is fixed. Okay, so these are the 3 transaction costs. Okay, so you pay 913 ringgit, 0.27 ringgit. 0.27 for your transactional costs. Now, if the company makes profit, they will pay out dividend directly to you because you are a shareholder. Now, say the situation comes to a point where, you know, the price of the company share has gone up to 1 ringgit and 90 cents. Oh, you have hit. Remember I told you about your target selling price? So say it's gone up to 1 ringgit and 90 cents. So the question is, will you sell your shares now? Well, if you have achieved your target selling price, yes, you should go ahead and just execute the trade. Okay, that means you actually sell your share. Now we have an investor A, okay, in the platform, okay, who is actually keen to buy the shares for 1 ringgit 90 cents. Okay, so you have someone who wants to buy and someone who wants to sell. So therefore, there is a sale. So from here, all right, you will make a gross profit of 1,885.43. Okay, after expensing out all of your transaction costs. So there will be a transaction cost incurred when you buy as well as when you sell. So what is the net profit? Earlier you paid 913 ringgit 0.27 cents. Okay, and now you are actually, you know, getting back 1,885.43. So in effect, you're getting a net profit of 972 ringgit 0.16 plus the dividend that you've actually collected from earlier. Okay, nice. Okay, let me just brief you on some of the terminologies related to shares. Okay, number one is bought lots. So in BURSA, on BURSA Malaysia, one bought lot equals to 100 shares. So this makes it affordable to buy shares given the small bought lot size, which means that even if you do not have a large amount to set aside for investment, you can still buy a small amount, that is to buy 100 shares. So how much is 100 shares? Okay, let me give an example. Let's say you decide to purchase one lot of BURSA Malaysia shares. And the share price, I think, on Friday was 7 ringgit and 65 cents. So simply, you need to fork out 765 ringgit for this transaction. So you get one lot of BURSA shares and you become a shareholder of BURSA Malaysia. Okay? The second one, dividend. Dividend is basically money paid out to shareholders when the company makes profit. When they make profit, they declare dividends. Yeah? The third one is contract notes. So contract notes are transaction statement that the brokering house will send out each and every time there is a buy or sell of shares. So in this transaction statement, it will give you the details of your cost of purchase when you're buying or the proceeds of your sale if you are selling. Now commission charges, okay, whatever transaction cost, everything is actually shown on this contract note, okay? And the transaction cost that you pay each time you buy and sell shares, okay, will be clearly spelled out in this contract note. All right. Now, and the last one is CDS, Central Depository System Statement. Okay, all CDS accounts are maintained by BURSA Malaysia. So if you have, because you have already opened your CDS account, remember earlier on for RM 10 ringgit per account. So this CDS statement will actually show you the number and the types of your share that you own in your account. All right. Again, the transaction costs, for you to be well aware of what the transaction costs are for share trading. All right. The stamp duty is 0.1%. And the minimum amount you pay is RM 1 ringgit. Maximum is 200 ringgit. Clearing fee is 0.03%. And the maximum you pay is 1,000 ringgit. Now, brokerage fee can range between anywhere between 0.035 to 0.6%. And as I told you, brokerage fee will differ across the brokerage companies. All right, but the industry standard is actually about the median, 0.42%, which is about 12 ringgit. Yeah. So as I mentioned, if you do not have a trading or CDS account, scout around from the 23 listed participating dealers or brokers. Okay, who is able to offer you a reasonable brokerage and good service. Okay, BURSA Malaysia markets. BURSA Malaysia basically holds 3 markets. Okay, and most of the listed entities are hosted on the main market. So we can see there are 762 stocks which are listed on the main market. And on the main market is basically reserved for large, well-established companies with a profit track record. Okay. Besides the main market, we have something also called the ACE market. ACE market comes with 140 stocks listed on it, and companies with strong growth plan and profit track record, they are all listed here. Okay, and last but not least, we have the LEAP market, or what we call the Leading Entrepreneur Accelerated Platform Market. So what is this platform for? Okay, 38 companies listed here. This platform is actually to facilitate the growing companies because they don't have any track records. Okay, so only high net worth or sophisticated investors are allowed to buy shares listed on the LEAP market. So if you're interested to invest in the LEAP market, please speak to your broker. Okay, so you will be required to sign a form, okay, whereby they say that a sophisticated investor, by definition of the Capital Markets and Services Act 2007, is someone whose total net personal asset or total net joint asset with the spouse, okay, exceed 3 million or is equivalent in foreign currencies, excluding the value of your primary residence. Okay, so if you're interested to invest in any of the market, especially if in the LEAP market, okay, speak to your broker. All right, now, how to pick a great company? So how to pick a great stock? Number one, consistent profit growth. Consistent profit growth is one of the key elements, all right? And it's also important to pick a company with little debt or low gearing ratio. Why? Because if a company has high gearing ratio, it potentially means that they may not be able to give good dividends. Why? Because they need to pay the debtors off first before they can pay you as a shareholder, which may be little, okay, or none at all in the end. Okay, strong cash flow is another important element too, as the company can manage its expenses without having to rely on loans. Increasing dividend is something that investors look for also if you want to invest in a company who provides you more dividends over the years. And not last but not least is their board of directors and management team. Okay, so that they are able to guide the company to perform well based on their strategic decisions and the execution of their strategies. Okay, so with that, we come towards the end of the first presentation, and I actually would like to make some references to some important websites offered by BURSA Malaysia. Okay, so we know BURSA, the first one, I would like to draw your attention to BURSA Academy. Now, what is BURSA Academy? Very interesting, very informative, and very user-friendly platform. Okay, BURSA Academy is a comprehensive e-learning portal that was launched just last year, the 3rd of June 2020, to provide investors and individuals with a continuous and holistic learning journey. Okay, so if you actually go into BURSA Malaysia, you can scan the QR code there, okay, or just go and Google BURSA Academy. This portal is very simple, user-friendly, and most importantly, you can just access it anywhere, anytime at your own place. Okay, at your own pace. So please visit BURSA Academy to view the contents that we have provided. Okay, for all levels of life and all forms of individual, be it whether you're a beginner investor, whether you're intermediate or even advanced investor, BURSA Academy has something for you there. Okay, so the URL, okay, is bursaacademy.bursamarketplace.com. Okay. Now, BURSA Academy also allows investors to dive into a pool of curated learning contents in various forms. Okay, so if you actually go into BURSA Academy, these are some of the things that you can see. Okay, so you can have your quizzes, you can have your, those people who enjoy, infographics. Okay, they have infographics there for you. Okay, there are also articles and also webinars, all right, for you to attend. Okay. BURSA Academy also has some gamification built into it to discover the investor in you. So do visit BURSA Academy website and try this gamification and also access the various rich contents that have been specially made for you, all at a price which is free. Okay, this is made for the public, for public education. So please go ahead and enjoy yourselves in this website. Okay, nice. So that ends the first part, which is the basics of investing. Now, so the bonus section today is on financial fraud. Okay, basically how to not get scammed and to start to be alert, okay, for all these types of fraud. So this is what we can see, okay, all these news clippings, every day, almost every week, when we actually browse through our e-newspaper, whatever we have, okay, we see headlines, of these scam victims. Or if you actually look at this scam news clipping here, what is the key takeaway that we have about this slide? Now, the most important key takeaway is scammers, they actually do not choose their victims. Okay, you can be anyone, they can scam anyone, right, regardless of who you are, regardless of your age, regardless of your gender, your occupation, even your educational background. Okay, recently I think we read news also of some high-level financial executives who were also scammed. You see, so that proves to you that scammers actually don't choose their victims. Anyone can become a victim. So in as long as you can establish contact, or in as long as the scammers can establish contact with you, then you potentially may be scammed. Right. There are many different types of scams out there, and anyone can be a scam victim if we are not alert. Okay, and we are also seeing huge amounts of money that are lost to scammers. All right. Now, scams are not only happening in Malaysia, but it is also a global phenomenon. Okay, based on a global study by scamadvisor.com, you can see, all right, 36 billion euros have been lost due to scams. 140 million scams reported worldwide. And scams affect 3% of the global population. Staggering numbers. And evidently, this is not a local issue. This is a global issue. All right. Now, nearly all countries also have reported a high growth in online scam. Poland, for example, 73%. India, 50%. New Zealand, 41%. US, 33%. And Belgium reported 27% of growth in online scam. Very scary. And online scams also constitute a 33% of the overall scam in the United Kingdom. In Singapore, of the amount of scams they have, online scams constitute 27% and 14% in Russia. All right. So they illustrate the prevalence of scam nowadays. All right. If you look at this part of it here, okay, the net income generated by scams, $40 billion in 2019, okay, surpasses the net income generated by technology giants such as Microsoft, Alphabet, Samsung, etc. Except for Apple. Scammers still haven't beat Apple, but just take it with a pinch of salt. I'm just trying to explain to you the prevalence, how serious, okay, this scam issue is at this moment, especially during these COVID times. Yeah? What about scams in Malaysia? Now, according to the chairman of Securities Commission, and also PDRM's Commercial Crime Department, they reported that Malaysians have lost a total of 769 million ringgit to scammers over the last 3 years. And that online scams was one of the most rampant amongst the scams committed. So for the first 6 months of this year alone, Malaysians actually have lost a total of 914 million to scam. That was January to June 2020. So if you have an opportunity, you can actually attend this InvestSmart Festival. Okay, this was actually spoken during the InvestSmart Festival. Okay, it's an annual campaign by Securities Commission to create more informed investors. And BURSA Malaysia has also been a regular event partner. Okay, we encourage you to check out this event. Yeah. Now, what is financial fraud? So we talk about scams, we talk about frauds. Okay, what is it basically? So the key point is, okay, many fraud cases involve complicated financial transactions that have been engineered by white-collar criminals with knowledge on finance and business. So it is actually very important to be extremely careful. All right. And many of us here today also would have received a call sometime or another, okay, on your telephone number, an unknown number, someone that you don't know, okay, and, on regular basis. So just a fair warning to you. Statistics show that it is most likely that it's actually coming from a scammer, okay. Many of them are also automated phone calls or robocalls regarding outstanding traffic summons. You know, they tell you that you have uncollected parcel delivery, okay, or you have a legal case, ongoing legal case that you need to attend to, but all this you're not aware of it, okay, and somehow we get scammed because of the fear that we have. So scams are becoming very complicated and scammers are becoming very sophisticated and automated nowadays. Okay, so be wary of it. Yeah. Now, this slide shows us the various types of scams that exists. Okay, since the start of the COVID-19 pandemic, the number of scams have intensified and scammers have become very creative. And also because with this pandemic, we are spending more time online, be it studying or working from home or shopping online, for example. Okay, there is always a higher chance to encounter or to engage with a scammer. Okay, this is not an exhaustive list of the various types of scams, but these are some examples that you need to be aware of. The first one is identity theft. Okay, someone stealing your identity. Most of the time, it's the password that you use. All right, they are able to actually find out what your password is. All right, so make sure you check the strength of your password, okay, before you actually use them. Number two is credit card fraud. Someone steals your credit card information, uses your credit card, very straightforward. Okay, debt collection fraud. Someone calls you and threatens you to settle the loan. All right. And also, sometimes they call you and ask you for your one-time password or OTP. Never reveal your OTP, yeah? And the fourth one is loan scams. Someone offers you a loan, whether over the phone or face-to-face, but they insist that you pay an upfront payment to process the loan. Please be careful of that. All right? Investment scams. Okay, investment scams is something that we will cover in great detail after this. Okay, but just an overview. It's basically involving huge sums of money and also super normal profits in a very short time. All right, then you have your job scams, okay, Microsoft scams also, social media scams whereby scammers actually use logos, even BURSA Malaysia. BURSA Malaysia is often a target. Okay, these scammers, they use the BURSA Malaysia logo, okay, to sell their investment products. So at any point that you come across this, you need to report it. Yeah, okay. And finally, because of our current situation, we have our COVID-19 related scams. Okay, so given the high demand earlier for face masks, you know, for gloves, okay, people are duped into buying this fake face masks, or even, you know, going into deals that don't even exist. And now with the vaccination, please be careful with people who are marketing vaccines and also vaccine passports. So if you're registering to get your vaccine, always go through the correct channel, which is either your MySejahtera app or through the KKM or MOH approved channels. Yeah? Okay. Now, let's talk about investment scams. Okay. What are the three major types of investment scams? Number one, it can be a totally fictitious investment which doesn't exist. Okay, somebody selling you something which totally doesn't exist but persuades you to part with your money. Number two, it can be an investment that exists, but the scammers, after convincing you to invest money in that particular investment product, they run away with your money. Okay, and number three, scammers who pretend that they are representing a legitimate organization. Okay, be it BURSA Malaysia, be it any other of the licensed, investment organization. Okay, always check your source very carefully. So what are the common warning signs, yeah, that will tell you that it may be an investment scam? Okay, number one, when the company suddenly reach out to you out of the blue. Suddenly BURSA Malaysia, for example, call you up, you know, and say, you know, encourage you to invest. Okay, then you really need to be careful. Or when they pressure you to make a decision very fast. Okay, or they keep calling you and emailing you frequently, asking you to invest. Of course, another one is when the returns is too good to be true. That means whatever they tell you about the investment product, okay, when it's too good to be true, then definitely you must be sure that it's too good to be true. Okay, don't be so gullible or naive. Yeah. Sometimes also certain investment scams, they come and tell you you have to keep quiet. You know, don't tell anyone about this investment scheme. Okay, it's exclusive to you. Well, if you get someone who tells you that, please be wary. Okay, it is a warning sign. And of course, you need to check whether it is a registered entity or not. So you can check on the Securities Commission website, you can check on Bank and Nagara's website, okay, for all these registered entities, yeah? All right. Besides that, most of the other common investment scams, okay, not an exhaustive list, okay, but some of the common ones that we have are like your Ponzi and pyramid schemes. Okay, recently we heard also of Ponzi schemes, a very big one in Singapore. All right, unregulated products, even trying to sell you overseas holiday properties, land banking, popular at one time, forex trading, very popular now, cryptocurrency scams, yes, be careful, a very popular investment product, especially for the younger generation, and profits also from the rising prices in the speculation of the prices of precious commodities. Okay, so these are amongst some of the investment scams that you need to be wary about. Okay, so what are the other common catchphrases that you need to know scammers can use? Giving you half the commission if you sign up, for example. You know, telling you there's limited slots, okay, or you have a bonus if you sign up now. Okay, or giving you testimony saying that, you know, other savvy or experienced investors have already invested in this. So it is a good opportunity. Why don't you just, you know, invest in this? Please be wary. Okay, please do due diligence before you invest in anything. All right, do your homework. Yeah. All right. So generally speaking, all investment scams are essentially get-rich-quick schemes where they offer unrealistic returns with high levels of risk. They will tell you about the returns, but most of the time, the risk part is well covered. Okay. It is the desire of many of us, yes, I know, okay, to grow our wealth as soon as possible, as fast as we can. And because of this financial behavior that we have, you know, the want or the need to be able to grow our wealth as quick as it can, or to reach our financial goals as fast as we can. So because of this financial behavior, many scammers will target us, okay? So please be wary, especially for this get-rich-quick schemes. Okay. Now let's look at some of the creative investment schemes that have been popular. The first one is the cryptocurrency scam. Now in Malaysia, there are only 5 official cryptocurrency that can be traded. All right. That is Bitcoin, Ethereum, Ripple, Litecoin, and most recently they actually added the Bitcoin Cash. And there are only 3 registered digital asset exchanges. All right. We can go to the Securities Commission website and you can actually check on the list of registered digital asset exchanges. So the one which is that we commonly know is Luno. The second one is Synergy, and the third is Tokenize. All right. Any others? I would suggest that you go to the Securities Commission website and you check to see whether, you know, the cryptocurrency trader that you're trading with, whether they are legitimate or otherwise. Okay. Pyramid schemes also is one of the quite popular investment scam. Now, pyramid schemes are basically without any underlying products or services. So how do they operate? Okay, it just focuses on recruitment. For every member that you recruit, you will be paid a commission. But because for every member that you recruit, you have to pay an entrance fee, for example. And part of it will become, you know, it goes to pay to the commission of your introducer. So if every one member recruits 6 others, you can replicate the same process. Looking at this pyramid, okay, you can replicate the process with your downliners 12 times before you run out of people in this planet, because we have about 7.9 billion people now. So it will be replicated 12 times. In Malaysia, our population size is about 32 billion. So you can only do it 9 times. So many people ask, what happens, you know, when they cannot replicate themselves anymore? Therefore, that's where your pyramid schemes will collapse. All right. So pyramid schemes are unsustainable. Okay, and keep a watch out for it. Yeah? Now, Macau scams is also a very popular scam. Okay, scammers may call you directly on the phone and pretend to be a police officer, okay, or even a bank officer or credit card officer, even post laju worker, income tax department, or bank negara themselves. Okay, they are bold. They can call up and claim to be any high authority people. And sometimes they might even spoof the caller ID. So when you look at your phone and they call you, you have a caller ID, right? They can spoof it to show you Bank Negara Malaysia or Post Laju or any of the courier companies. And after that, they claim that they know your name, your identification card, and they say that your bank account, say, is actually associated with some drug-related activities or money laundering activities. Okay, that's where we panic. Okay, when we hear such claims from them, okay, the victim will panic. And when they panic, typical of Malaysian, we will ask, how can we settle this? That's where the scam comes in. So that's where they start to ask you to transfer some money into some bank account, or they ask you to temporarily transfer your money from your account into a safe account, while they investigate the case. So after you have transferred the money to a specified bank account, which is normally a personal bank account, what happens? The scammer withdraws the money, and that will be the last that you ever see of it. Okay, so what do we do when we encounter such a call? All right, number one, don't panic or react hastily. Always remain calm. And if you are sure that it is a scammer, you hang up the call immediately. Okay, and after that, if you just want to make sure that there's actually no impending cases or no lawsuits or court cases waiting for you, check with the relevant department. Okay, if it's a police officer, call up PBRM, say you receive a call from so and so. This is your details. Okay, verify the claims that is made by the caller. All right, and the next type of scam that I would just like to highlight to you today is love scams. I think in the recent month, we have seen a few reports about love scams. And this is basically because of our current situation. People are just basically lonely, all right, and spending more time online. So when people are spending more time online, there's a higher chance of encountering and engaging with love scammers, all right? So what do these love scammers do? Okay, they're not your normal mom and pop kind of people. Okay, they are sophisticated individuals. They will study your profile and your digital footprint. They will look at your Facebook, your Insta, TikTok, LinkedIn, everything. Okay, they will study you. They will study your digital footprint. And then they will come up or adopt an online persona to fit your personality. And they will gain your trust from the kind of conversations that they have for you. So what kind of professions do they normally claim that they are working in? They say that, I'm working in an oil rig, or I'm in the military, or I'm in fact a doctor with an international organization. And what are the signs? What are the warning signs? They profess their love very quickly to you. They claim that they are overseas for business. They are stuck, they can't come back because of the COVID, for example. All right, they plan to visit you, but because they can't because of the COVID situation, right? And sometimes they start faking illness. After they gain your trust, then one day, all right, they will call you and they start faking some illness, or, they start faking some problems where they need your help. So what kind of help do they want? Sometimes to pay for, a certain debt that they have to clear, or to pay for the hospital fees, all right, or to pay gambling debts. We never know, right? Because we are so enchanted with that. Okay, we actually believe what they say. And then they will ask you to wire money to them, or send money to them via online. There are many methods and easy ways to send money online now. Yeah. Okay. Now, what do you do? What can you do if you think you are a victim of a love scam? Number one, stop communicating with the person immediately. Talk to someone you trust. Okay. Do a Google search to see if the other people also, if there are other people who have had similar stories. All right. If you have a profile photo of the person, do a reverse image search of the person that you have been communicating with. Always remember, don't transfer money to people whom you just met or that you meet online. Most importantly, also, do not accede to their requests. Any request for that matter that may put you in a vulnerable position. Okay, it can be sending of photos, videos, whatever. Okay, please be careful with this. And inform the police if anyone is trying to extort money from you. All right. So how do we do a background check? Number one, if you want to report a scam number, okay, you go to the MCMC website. Okay, you can take a screenshot of this. If it's a consumer complaint, all right, you can actually approach the Ministry of Domestic Trade and Consumer Affairs directly, or alternatively, okay, you can escalate your complaints to the NCCC, all right. To raise any banking related scams, okay, go to Bank Negara Malaysia, the telelink, the contact numbers are there. You can also report to BURSA Malaysia via BURSA to you if you have encountered any scams in our marketplace. Either like what I told you from the beginning, the misuse of the BURSA Malaysia logo in fake investment opportunities, or whether if you're unsure whether your investment product is legitimate or not, go to BURSA to you. Okay. Now, all right. These are the 4 basic behaviors, okay, that scammers target. Number one is fear. Okay, because they know we are scared, we have fear, okay, and therefore they capitalize on this behavior. Okay, when we panic, we make hasty decisions. Okay, don't panic. Always remember this. Number 2 is because of ignorance. How do we become a scam victim? Because we are ignorant. Okay, investment products sometimes can be very complex, so always research to find out more before you invest. Seek as much clarification as possible. All right. Number 3 is because of gullibility. Always be alert when you're approached by a friendly stranger or someone who wants something from you. And number 4 is because of our innate nature, the greed in us. Okay, it takes a lot of hard work and also smart investing to grow your wealth. So simply put, there are no shortcuts in life. Okay, and also just a tip before I end today. So given the frequency of spam callers, as I told you, do not engage with them. And how do we disengage with the scammers? I would encourage you to install Truecaller, okay, from either your Play Store or Apple Play Store, Google Store or Apple Play Store. All right, to differentiate between the spoof and non-spoof calls. Okay, and so with that, I actually end the session on financial scams. Okay, just a little bit about my company, which is Core Plus Advisory. You can like and follow our Facebook page, okay, Core Plus Advisory, and also follow our Instagram page, okay, to get the latest news and updates on personal finance and also on the kind of financial literacy programs that we run. Yeah, okay. And you can also personally reach out to me to find out more about your financial health and also how to kickstart your financial planning journey. So I'm a licensed financial planner, okay? And you have there my email address, my LinkedIn, okay? And also my website that you can actually visit, okay? So with that, okay, we end today's session on sensibility, savings to investing. All right, so I will actually now address any of the questions that would have been brought in. Okay. All right, so I have 3 questions that has been actually posted here. Okay, the first question actually says that where do these people actually get our names and numbers? Okay, is there a breach of PDPA in any of the institution? Okay, actually all this PDPA was actually put in place to avoid people getting our names and numbers. Okay, that is actually something that the government came up and put in place so that our numbers and names don't be compromised. But there are other ways how people can get our names and numbers. Okay, let me tell you a very simple example. Do you do online shopping? Now, if you do online shopping, okay, what happens is that what they actually do is that they will actually print this shopping label and they will actually stick it either to the box or to the package that they send to you, isn't it? So the courier company will actually bring it to your house, okay, and you're very happy, you get your goods, okay, you receive it. Okay, what do we normally do? We open the box, we bring out the goods, okay, and we discard the box, we send it for recycling. But do you know that you're actually missing out on a very important thing? Do you realize that your name, your address, your phone number, everything is on the shipping label? Okay, so this is one tip that I can share with you. If you actually do online shopping, make sure, all right, you actually really take away or cut off, yeah, all the shipping labels, or even the return labels. Certain platforms, they even print the return labels to you. Make sure all those are destroyed before you actually send your boxes or whatsoever for recycling. All right. So, okay, the second question that I say, they can see here, is StashAway a legit investing app? Okay, StashAway is actually a registered digital platform for a digital trading platform. Okay, they're actually robo-advisors. Okay, but they are actually, what they do is that they are actually intermediaries. What you do, you give them the money and then they will actually invest the money for you. Okay, so they are actually digital investment platform, and whether they are legit or not, okay, you have to check, yeah, okay, whether this StashAway app, where you actually download it from. Download it from a legit store, okay, not any link that you get. Make sure that it's a legit app in the first place. And if it is, then it's a legitimate investing application because they are approved by Securities Commission. Okay, do a quick search, okay, on the Securities Commission website, okay, and then you will be able to see the list of legitimate investment organizations. All right. What about your thoughts about cryptocurrency versus stocks and mutual funds? Okay, which one is better? Now, I wouldn't say there is no which one is better. It actually depends on your risk profile. It actually depends on your time horizon, and it depends on the kind of capital, amount of capital that you have. Now, cryptocurrency is a class of asset that I would classify as alternative investment. Okay, and I would say that they are in the same group with things such as, you know, your gold, you know, your silver. We call it alternative investments. So there are 5 classes of assets that you need to know. Okay, your cash, your bonds, your equities, okay, and then you have your shares or stocks and your alternative investments. Okay, mutual funds is a wrap. A wrap meaning that it actually encompasses, it is not an asset class, but it is actually, it encompasses all the different types of diversification. Diversification of product and diversification of fund manager. Okay, which one do you think is better? It depends on your profile. Cryptocurrency, I normally would advise my clients that they do not allocate anything more than 10% of their total portfolio to cryptocurrency. So you have your 5 asset classes, right? And therefore, you will have your individual allocation for each asset class. You need to have some cash for your emergency funds, okay? Some bonds, okay? And also your equity, okay? You need to also have some REITs or your, you know, your properties and so on. Okay, so it's very much individual. I would advise that you actually speak to a licensed financial planner, okay, who can actually advise you better further. All right? Okay. How much is, maybe this is the last question that I will actually do. Okay, what does your company do? Okay, financial planning, can you elaborate further, a little further on that? Okay, actually, we are a licensed financial planner. Okay, and we are actually licensed by the Securities Commission of Malaysia to perform the what we call the task of licensed financial planning. We offer comprehensive financial planning services to our clients. We do not sell products. Okay, the first thing that we don't do is we don't sell products. Okay, we can advise you on cash flow management. We can advise you on wealth management. Okay, we advise you on your risk management. We can also advise you on your tax, on your estate planning comprehensively. We understand your overall financial situation, get a big picture, okay, of your current financial situation, and give you advice on how you're going to manage all these different parts. Licensed financial planning is it's actually up and coming in Malaysia now. Okay, so if you want, you can actually go to smartfinance.com and you can actually see a list of all the licensed financial planners in Malaysia. All right, so I think that's all the time we have. I've actually received an indication. Okay, I have a few more questions. Now, if you actually have more questions for me, you can actually contact me directly from the details that I've given earlier, and I'll be more than happy, okay, to answer your questions. All right, so with that, thank you very much, everyone, for spending your afternoon with me. Thank you for taking the time for listening in, okay? And hope you have a happy investing journey, okay? Thank you very much. And
Oh, hi. Welcome to the BURSA event. My name is Pauline Young, and then I'm a licensed financial planner. I'll be talking about the topic of investing for women, how to get started. Okay? All right. Okay, let's start. This is my background. I'm also a book author for a few books, investment and financial planner, and I'm a licensed financial planner for the Securities Commission and also the Bank Negara. And okay, so today's topic, we're going to talk about, basically there are two things that we want to look at. Why we need to invest, number one, and then number two, how we should go about doing it. And there's according to a statistics by the S&P Global Survey, it says that only 26% of the women invest in the stock market. Okay, so this figure is rather low. So that means there are only 26% of the women actually invest in the stock market. So how can we improve this number? So that is my objective today. So hopefully by sharing with you guys, I can actually turn some of the misunderstanding into some encouragement for you to invest in the stock market. Okay, so first, why do we need to invest in the stock market? Now, if you to look at stock market, a lot of time we think that, well, for me, when I just started out as a investor or investing in the stock market, I actually think that investing is more like a short-term thing. Like you try to make money in the stock market and you want to make some quick bucks out of it. But after I became a research analyst, okay, in 1997, and that was the Asian financial crisis. So that was a time when I started to see that, wow, we can actually make money from the stock market, and the price, whenever there is such a great opportunity, you can actually make so much money out of the stock market. And then I also learned about financial planning. Okay, so this learning about financial planning has turned my life, because actually, if we can look at investing together with financial planning, we are actually looking at a more holistic investing approach. So this is why I want to share with you guys about investing, and look at investing as a small part of our overall financial planning, wealth planning. Okay, so here we are looking at life stages. So in life, we go through different stages of our life, and we may not have the same objective for everyone, but more or less we have the same or similar kind of objective. So basically, when you just started out working, you probably would think about buying a car, and then you will getting married, buy a house, children education, retirement, traveling, and buy bungalow and legacy. So all these are the objectives throughout your life cycle. And when you look at these, you are looking at different stages of your life. You make certain decisions. Okay, and the decision is important because it will affect your retirement stage here. So what I'm going to show you is that how to accumulate your assets in terms of the stocks and in terms of any other assets like properties, and so that you can retire comfortably. Okay, so if you to do some quick math calculations, if you look at, you started at age of 25, you start work at the age of 25, and then you retire at the age of 55, so that will be 30 years of working years. Okay, so you're looking at 30 years of working years, and then you look at your retirement age. So if let's say you're looking at 85 of your lifetime, so that means from 55 until 85, you will be another 30 years of a retirement age. So you will have to work for 30 years, and then you have to retire for 30 years. So what if you can live up to 95 or 105? So that means you will probably be retirement age longer than you think. So how to ensure that you have a good retirement? So then we have to look at this accumulation stage, and this accumulation stage we will focus on the properties and also the stocks. These are two major sources of assets whereby you can increase your wealth. Okay, and let me show you something. Now, I would think that this time, we all know that we are in a recession, okay? So when you are in a recession, just like when I told you in 1997, 98, I started investing. I was a research analyst, and then I saw how the price actually increased so much within a short period of time. And then, of course, there was only one recession, and I experienced a few other recessions after that. And then in this minor recession or major recession, and you are able to capture or to take advantage of the low price in the stock market, and then to increase your wealth further. Okay, so this is a golden opportunity. So for example, okay, if I can use the pen in the here. Okay, so if you look at these, so we are looking at this is 75. Okay, so we are looking at this is in the 70s and the 80s. So this is 75, and then this is 85 or 86. Okay, and then you are looking at this one is 1998, 98. And then this one is 2000, 2001 .com bubble, 2001. And then this one was 2008, the subprime crisis. Okay, now this one is called the GDP. Okay, real GDP, annual real GDP growth rate. Now, what does annual real GDP growth rate means? GDP stands for gross domestic product. So you are looking at the wealth or the financial status of a country. So if you are looking at the financial situation of a country when it is in a negative or zero situation, it means that you are actually in a recession. So how many times of recession did we have for the past 50 years? And you can count based on your one hand, you can count the number of times. There were not many times that our GDP figure actually touches the zero or negative level. So if let's say we are in the state of this negative GDP, isn't it a golden opportunity for you to take advantage in the stock market? Okay, so if you look at it over here, we see that our stock market here is 75, and then the GDP is almost zero. It wasn't even negative, it was almost zero. Then you see the 86, we have a -1. Okay, then the worst, of course, was the Asian financial crisis. So it was a -7.4%. Then the .com bubble, almost zero. Then you have a subprime crisis of -1%, 1.5. And then you have it here, 2020. Okay, so 2020, 2020, okay, 2020, what was our GDP? It was all the way down to -5.6%. Okay, so that was our last year annual GDP growth rate. It was a -5.6. So if you were to look at these figures, this -5.6 was actually not far from this -7.4. So if you were to look at the extent of the recession, the worst recession was this, and this 2020 last year was considered the second worst recession for the past 50 years. So that means what? That means it is golden opportunity for you to invest in the stock market. You just have to give yourself some time. Investing in the stock market is not a quick rich scheme. Okay, you definitely do not look at it as a quick bucks kind of a thing. You have to look at it as a long-term thing. So for me, I give it a time until the time frame of 2023. Okay, so I'm looking at investing now, and then you have to invest with some spare money, and then to leave it for 2 years, okay, until 2023, when the pandemic is over, when the market is recover, then you see the prices go up again. Okay, let me give you some example. In 1998, I bought public bank at 1 ringgit. Okay, can you imagine public bank at 1 ringgit? So that was in 1998, and I sold at 4 ringgit. Okay, so of course, if you to tell me that, oh, you shouldn't have sold it, now is even more. But the thing is that within a short period of time, when you see that your portfolio increase, you have to take profit. Okay, then along the years, so these are the times whereby I bought CIMB Bank at 250, around here, 2004, 2003, 250, and then I sold at 650, okay, in a few years' time. So that means I was willing to hold for about two years, okay, 2 or even 3 years. So then you are looking at this kind of opportunity. And then also in 2008, I managed to buy my Maybank at 3 ringgit. And then within 1.5 years, it became 6 ringgit, double up. Okay, so whenever you are in this severe kind of market downturn, it is a good opportunity for you to increase. So back to that here, where we say that we want to accumulate our assets, right? So number one, we want to accumulate stocks. Okay, we want to accumulate stocks. And how do we do that? So you look for opportunity in a depressed, whenever the GDP is 0 or negative. Okay, whenever the annual GDP is 0 or negative, you invest in the blue chip stocks with dividends. Okay, invest in the blue chip stocks and you wait for it to double up. So for example, Maybank, let's say 2008, I bought at 3 ringgit. Let's say I bought 10 lots. Okay, 10,000 shares. And 1.5 years later, it became 6 ringgit. And you sell half of it. Okay, so you left 5 lots, 5,000 shares here. So that means when the price double up, you sell half of your shares, you are actually getting back your capital. So that means what? That means these stocks here is cost-free for you. FOC, cost-free. Okay, and these are all dividend stock. So once you get it for free, you just leave it there. And then you continue to do whatever you are working, whatever, you just continue. And this one is like a passive income. And because if the industry is a long-lasting industry, like a banking sector, even until you retire, you just keep it. And then every year, you just have to collect your dividends. And then whenever there's another round of a recession, because probably in your lifetime, you wouldn't have too many times. It will be like maybe in my case, I have already seen 5 times. So maybe in your case, you probably will see like in a person's lifetime, maybe 5 to 10 times. Okay, so as long as you find this opportunity, you keep investing. And then you can collect more, accumulate more and more of these FOC stocks. Okay, and they must give you a dividend. Along the way, if you find that the dividend no good and then the company have lost its fundamentals in terms of their financial ratio and things like that, is not as good as before, you can always sell them. Okay, you have to manage it. You can't keep it and then forever. You definitely have to manage it. So then you will have to make sure that for this accumulation stage, you have to accumulate as much as possible of these stocks because they are FOC already. So you don't have to bother about the next financial crisis. Don't bother because they are free. So you just keep it there and then just collect the dividends. Until you are retired over here, you will have a lot of portfolio over here. Okay, and all these are the stocks that you acquire in a long time. Okay, then you will be very, very happy for a retirement over here. Okay, so that is for stocks. Then, of course, you can always think about how to invest in the property. So I would think that for any recession, it is always good time to invest in the properties. Okay. Although today we are supposed to talk about stock, but then properties, it is a form of asset class whereby we can find some good opportunities here. Okay. So over here, in your earning years, so these are your earning years, golden years of earning. So you have to earn as much money as you can, provided you have a stable job or you have a good business. And at the same time, you must also know how to invest your extra money. Okay, whenever you have some savings, you invest. So sometimes you don't have to wait until recession. Along the way, you can invest in a unit trust on a regular basis. Okay, so now I'm giving you many options here. You can invest in the stocks, you can invest in the properties, and you can even invest in the unit trust. As long as you are investing in the stocks or equities or properties, you are investing in the assets class or even gold. It's also a form of asset class. You can fight the inflation, because our objective here is that we want to fight the inflation so that we can reach a very comfortable retirement age. Okay, so I'm going to talk about why we need investment first. Then only I will talk about how we can go about doing it. Okay, so now we just let me finish up with this why we need to invest. So number one, we need to invest because we want to have a better retirement. Okay, and number two, we want to invest because it's a golden opportunity, because now it's a recession time. So recession time, you have to, when others are fearful, you have to be greedy. Okay, so that is what Warren Buffett said. So that's how you need to invest when others are fearful. So, and I'm not saying that it will recover within a short period of time. Okay, the stock market, it will take some time. Even in the past history, you saw that whenever we have the severe recession, it doesn't recover, you know, within a short period of time. It will take some time. So you have to be patient. 2 years. So I'm giving you a time frame which is 2 years. By 2023, then you can start to sell your portfolio. But before that, you can keep accumulating. Okay, from now onwards until next year, you just have to keep accumulating. Whenever you feel that there's a sell down or whatever, you just have to buy some of the blue chip stocks. Okay, later I will tell you how you can go about doing it. So that's number two. And then number three, why you want to invest? Because as a woman, okay, and also as a mother, and also as a lady, we want to increase our wealth. Okay, as a family, you need to manage the household, and then sometimes you also want to increase the wealth of the family. So that's why I find that women are very good in picking the stocks, because women are always good in bargaining. So when you are coming to the stock market, right, you are always looking for good value. So in life, in the supermarket, in the whatever shopping that you're looking at, you always look for bargaining. So you just have to apply that mentality into the stock market, and then I'm sure you can find some good value, undervalued stocks. Okay, so that is the three reasons why I think that women should invest in the stock market. Okay, then I'm going to tell you how we can go about doing it. Okay, I'm going to show you some of the figures here. I haven't shown you just now. This is the stock market. So just now I showed you the GDP figure. So you can see that during these years, there's a recession, and then when we met back to the stock market, we see that this 98 recession, 2008 recession, whereby you see the price drop like 70% over here, and then it was a V-shaped recovery over here. Although you see that it's like a V-shape, then you have another dip down. Okay, so but the second dip is always higher than the first dip. Okay, so then you have a W, and then it go up. Then the next one is the 2008. So 2008, you see that the share price from here dropped about 40%, 30 or 40%, because if you're looking from here to here, and then half of it is around here, so here is about 40%. And it has a V-shaped recovery. Okay, also there is a W sign over here. So in terms of technical analysis, we are looking at a double bottom. Okay, double bottom means that it's a reversal. It's a reversal trend, and then you will see that the stock market recover. Okay, and just now we saw that in 1986, right? So this is 1986 also, but beyond that, you can see that there are some mild recession here. Sometimes it wasn't a recession, but then it was a bad sentiment, like stock market sentiment wasn't that good, but it wasn't to reach that stage of a recession, but that was not, the sentiment wasn't good. So the stock market has a fall over here, and then this one is like a major recession, then it has a deep fall. Okay, along the way you have some small drop, and this small drop is like a 10 to 20% kind of a drop. Okay, some is like, for this one maybe it's about 30% of a drop. Then over here we can see that we are in this category here. So last year we saw our KLCI index drop all the way down to 1,200 points. So that was the lowest that we experienced in the past 10 years. Okay, and then we had a rebound to about 1,600 points, and now we are at about 1,500 points. So where are we? So I would think that we are in the path of recovery. Okay, we may not be visiting this 2020 level, low level again, but we are low. Okay, we are still low, so it is still good time for you to invest. So you just have to pick up your bargain hunting skill, and then to find some good value blue chip stocks with good dividend, and then you can invest. Okay, so of course, if you can see, I teach you one simple technical analysis way to spot the market top. There's one good way for you to spot when is the market top, because sometimes if you can spot the market top before it crashes, and then you sell some of your position, then at least you do not get stuck in the situation. Okay, so one way is that you look at this pattern. This is a multi-year, this is like a 30-year chart pattern, and then you look at these. Did you see like an M shape here? Okay, so this is like an M shape. Okay, so whenever you see like a M shape, it means double top. Okay, double top means it's a major chart pattern, and then the price will crash. Okay, then you see that another time over here, this one, if you to zoom in, it's a shape like this. Okay, this one we call it a head and shoulder. Okay, head and shoulder, also a market top pattern, whereby it signifies the end of the bull run. Okay, so this is a bull run. So this signifies the end of it, and then you see the market crash over here. Then over here, we see there's a big market top over here. You see, this is a huge market top. Over here, we saw that this market top is made from 93 to 97, is about 4 years time. And then this one is about 07 to 09, is about 3 years time. But this M here is a big M. It's the biggest M of all that we see compared to this two. So it means that we are looking at the market top. And this market top is considered quite a severe market top. So we are looking at this M, whereby it is looking from the 2012 until 2020, so it's about 8 years. So this market top is formed with 8 years of data, and which means what? Which means that when will we get the bottom and then recover? Most likely, I would think that it will be 2022. Okay, 2021, 2022, we're going to see some recovering, but then until after 2022, then we see a clear recovery for our KLCI and our economy, okay, judging from this chart pattern here. Of course, technical analysis is not always 100%, but at least it does give you a guideline, okay? Okay, so next, how do we go about investing? Okay, number one, we need to, okay, these are certain steps over here. So I'm just going to write over here. Number one, we need to identify our objective first. Okay, so these are investment plan. It's a proper investment plan from a financial planning perspective. That means you must do things in a proper manner so that you treat investment as a business to you. Okay, just like you want to do a business, you have to think properly how to plan for everything, and the money, how do you buy certain resources and equipment. So same thing here. For the stock investing, you treat it as your business, and then you have to treat it as if it is a very, very serious business. So you do not allow any form of wasting in the form of, sometimes, why I say greedy, because sometimes you will hear some tips from your friend, and then when you hear some tips from your friend, they will ask you to buy this, they will ask you to buy that, and then maybe you will, you know, buy without really looking at the fundamental. So then your money will be lost. Maybe you will gain, okay, but at the same time, there's a possibility for you to lose your money. So the chances of losing is there. So therefore, if you to treat it seriously, you do not let your money to lose so easily, then you have to plan it properly. Okay, so we have one step here. Okay, so it's a series of steps here. So I'm trying to see whether I can use my pen to write. Okay. So this is your objective. So this objective is actually looking at your financial goal. Okay, your financial goals. You can have many goals. You can have a short-term goal, medium-term, and a long-term goal. You must have certain objective so that you know what you want to select. The kind of stocks that you want to build has to gear towards your goals. It has to be in line. So, for example, you can have two portfolio. Okay, so you can have a short-term portfolio, which is about 2 years. So I can put here that I can have a short-term portfolio, and then I can have a long-term portfolio. And this short-term portfolio is about 2 years. I will not invest, like within 2 years, I want to see the results. Okay, so that's my objective. And then for the long term, I want to see more like a retirement. Okay, so it could be 10, 20 years. Okay, so maybe 10 years. Then, okay, then what can be the goals? Okay, there are many goals here. So you can have the most common goals that everybody has is the holiday dream. Okay, nowadays I know everybody is kind of like not thinking about holiday so much, but it is a good dream. Okay, it's good to dream about holiday dream. Okay, and this holiday dream is to have 20,000 of it has to be specific. Otherwise, what is a goal? A goal has to be specific goal. So I have to spell it out everything clearly. So it's like 20K to tour to my dream destination. Okay, I will not tell you what is my dream destination, but it would cost me 20K. Okay, so then it will be 2 years. So that means now 2021 until 2023. So we are looking at the 2 years time frame. So invest now, then 2 years later, hopefully I can have that dream, realize my dream. Then, since this is like a luxury dream, okay, because it's a holiday dream, so it's kind of like luxury. So when it is kind of like a luxury kind of a dream, you can have the strategy. You can construct a portfolio whereby the strategy can be a bit risky. Okay, more aggressive. So I call it more aggressive portfolio, whereby I should be looking at higher risk sectors. Okay, so number one is your objective. Then I put here, okay, since I have a space here. Number two is my my sectors. I need to select the sectors. Okay, I need to select the sectors. Now in BURSA Malaysia, we have 13 sectors: technology, healthcare, consumer, industrial, REITs, properties, construction, utilities, telecommunication. Okay, there are 13 of them. I cannot remember everything. So you don't have to invest all the 13 because you don't have the time. Okay, so you just have to select up to 5 sectors. Okay, I always tell people to select the 5 sectors that you are very comfortable with, that you understand the industry well, and of course it has to match with your objective. So in this case, okay, so in this case, I'm looking at this kind of like a luxury dream. So if I didn't hit the target, so the reason why I choose a more risky stock is because if I didn't hit the target, I will go to, let's say I only make until 10K. So then if 10K, I can go to a local or maybe nearby Asian region country. Okay, so that means what? That means luxury goal is something that you want to have a aggressive portfolio. If you can hit the target, that means you can make the money, the kind of profit is good, then you can go for the dream. But however, if it doesn't, because it's risky, right, you can probably lose some money. So if let's say you didn't reach the target, then you go to a nearby area or local tour. Okay, so that means that is the objective here. Okay, so what are the stocks here? So there are a few stocks, a few sectors that are actually considered of a higher risk. I'm sure you can tell me what are those. And actually, I'm looking at a few perspectives because now we are in a recession. So one is that I choose a sector that is for growth sector. Okay, if it's of a growth sector, probably the price will go higher. Okay, that's number one. And then number two, I can probably choose a sector whereby it is the worst hit sector. Okay, why I say that? Because currently we are in a lockdown mode, and then we have to identify which are the industries that are of a lesser, that means the worst hit. So which industries actually cannot do business because of the lockdown. And of course, they will lose the revenue. Okay, and of course, when they lose the revenue, then the share price will go down dramatically. Okay, so we identify those because after all, the target is 2023. So once the everything recover, so you will have to see that your share price probably will double or hopefully triple. Okay, so then we identify these two areas. Okay, from these two perspectives. So number one, the growth sector will be, I'm sure you know. Okay, will be this one. Okay, I have to write this one. Technology. Okay, technology. So this one will be looking at the technology. And then number two, we are looking at the healthcare. Okay, because everybody is concerning about healthcare because currently, okay, let me write first. Okay, currently what we are looking at here, it's a public health crisis. Okay, we are looking at public health crisis whereby the healthcare sector will have all the resources, all the money will go into. So this will be the growth sector. And in the past, these are the financial crisis. Okay, there is a risk, all the crisis or the recession, there is a reason behind it. So if you can identify the reason behind these crises, it was the financial crisis whereby the banking industry, okay, stocks were the worst hit stocks during this time. Whenever you have a financial crisis, the banking stocks were worst hit because basically you have a lot of non-performing loans and the revenue drop and then the price drop. Okay, so it reflects because of that situation. So that's why you identify, and then this probably will be the commodity crisis. So each of these crises, you identify what was the crisis. Then you target at that, because after all, we want to go for a more aggressive portfolio whereby we want to reach that luxury dream. Okay. Then we also look at, these are the growth sectors. Okay. Then we also look at which are the sectors that were worst hit during the pandemic. Okay. I'm sure you will have some idea. Okay. Let me write down. So the worst hit will be the properties. So property sector. And then we have the construction. So that means what? That means we will have to make a bold estimate. Okay, that means that these two sectors, hopefully by 2023, it will kind of recover. Okay, so these two, and then we have to plus one more or more stable one, because these are growth and then these two are risky because we do not know when the economy will recover, right? It will be of a higher risk. And then we have to add one more stable one, consumer sector. Okay, so we are looking at technology, healthcare, properties, construction, and consumer. And if let's say you want to add on, because I have 5 here, if you want to substitute one of these with another sector, also can. Okay, for example, other sectors are like energy, because energy can become like a black horse. Why? Because currently we are in a lockdown, so the oil consumption is low. So what happens if let's say we are in an open up economy? So everybody will be consuming the oil, petrol, and everything. Assuming we haven't gone into the EV car, because EV car is a bit far from us, we still need the petrol. So definitely, and then the plane and the airplane aviation all needs petrol. So probably because of this, demand will increase, and then the energy stock probably, I will not say 100% guarantee, but probably will increase as well. Okay, so we are looking at these high probable sectors whereby we want to maximize the growth, okay, the kind of a price appreciation for the stocks. Okay, so then these are the sectors that you select. Then only you select the number 3. Then only you select the individual stocks. Okay, so these individual stocks, I will not go through because not much time that I have. Okay, so you will have to select. Okay, so I'm sure you know the name. What are the names? Okay, just for education purpose, I just mentioned the name. It's not recommendation, it's just mentioning the names. So the names are, in terms of the market capitalization, the technology sector, the biggest market cap is Inari, and then the MPI, and then you have other technology stocks like VS, Dufu, Vtrox, you have the Frontcan, DNO, all these semiconductors. Okay, they are the growth sectors, and the best part, they export to the overseas. Currently in Malaysia, lockdown, and we are not really, recovering well, but other countries are not locked down. China, Singapore, US, they do not lock down. And these are our 3 largest export partners for Malaysia. So if our export partners are not closing up, in fact, their economy is doing well. So we should also look at our exports market. Okay, so those companies that involve operations that export to the overseas, and I'm sure their revenue is being able to maintain. Of course, during this lockdown period, they are operation-wise, they cannot operate their factories and they cannot have a production, but that is only temporary. So it's like 1 month or 2 months, right? I wouldn't expect this to be prolonged. So after these 2 months, it should be operation again, and then things should be looking good again. Okay, so now it's just a bad sentiment time, so you just have to pass this bad sentiment time. Okay, then we look at the healthcare. Okay, what are the healthcare stocks? The healthcare stocks are like Dua Pharma, Pharma Niaga, and then Apex, and then IHH. All these are the healthcare stocks, and also the glove stocks. Okay, the glove industry is also considered the healthcare because the glove is under the equipment, the supplies, equipment and the healthcare supplies. So it is under the healthcare. Okay. So there are so many stocks here that you can choose. So you look at how much you have. Okay, you look at your amount of money. So if let's say you are looking at 20K, so looking at 5 sectors, 20K divided by 5 is how much? Okay, divided by 5. So that means each sector you can only invest up to 4K. Maybe because let's say you just want to invest in 2K, okay, or maybe 3K, because you need them to double up so that to reach your 20K, right? So that means you have to invest 10K. Hopefully, for this 10K, it can double up to 20K. Okay, so that means I need to reduce it to 2K here. It's actually not much you can invest, but still you can, okay, because our minimum share is 100 shares, okay, so still you can. So okay, then what are the names for the properties? Okay, the properties, there are many developers, good developers, so you just have to use your observation. Sometimes you don't have to look at the fundamentals in terms of the numbers like ratio, but you look at the development. Okay, if you are familiar with the properties, you look at the properties market, and then you see that the developers, what kind of development they develop. Okay, are those development very good response? So if they are, then most likely they are the good developers. Then you can buy some of their shares. Okay, you don't have to buy the company or two. Okay, so now everything is low price. It's a discount because we always want to go for discount for our grocery. And if everything, clothing, everything, 50% discount is good. If you can get 70% of discount, is actually very good. So if you're looking at properties, actually can find some 50% or even up to 70% of a discount. And even some of the construction company, you can find this kind of a discount. It's a real fact. Okay, you just have to, I will not name the name, but then you just have to look at it. Okay, you have to go and look at it. You can see them. And the consumer. Okay, the consumer include a few industry beside the food and beverages. You have the retail, because currently the worst hit industry were the retail sectors. Okay, the retail, which is under the consumer. And then we also have the travel and tourism, right? So these are the worst hit. So when the economy recover, so these things all will improve. So the travel and the leisure. Okay, so therefore the airline industry is also part of it. And then the supermarket, and then the clothing department, all these stores, all these are here. Okay, so you just have to choose one or two, okay, under here. So in fact, you can't choose much, but like one or two from here. So we have a very small portfolio, and then see whether this can double up. Okay, treat it as an experiment. Okay, then And the next one, a long-term portfolio. So today I'm going to teach you two portfolio. One is that to build a more aggressive one for a short-term basis, and then the other one is more on a long-term. Long-term is that means it's more stable, and then you look at the income stream. Okay, so for long-term, what do you look at? You look at the dividends. Okay, so I will write somewhere here the long-term. Okay, right here. So the long-term dividend, okay. So under the long-term, I will have the dividend. Sectors will be mostly concentrating on the dividend and the growth. Not growth, but a bit of a growth as well. So dividend plus growth. So this one is like the growth plus the worst hit, right? So this one is dividend plus growth. So most likely I will still have my technology over here. Okay, technology and my healthcare still here. But now I want to put some banking stocks here. Okay, banking. And oh, it's slanting. Okay, never mind. And what else give you good dividends? Utilities, right? Okay. Oops. Then one more. So I have banking, I have utilities, and would you like to have REITs? REITs will be something now is of course very depressed, but maybe in the in the future when it recover, it may not be that depressed. So maybe you can put some REITs over here. Okay. So you have to find what type of REITs are. There are so many types of REITs. You have to find the right type of REITs. Try to avoid office kind of REITs, but more on retail because the economy will recover. So the retail or the hospitality or something like that. Okay. Okay. So there I have the 5 here. So how much retirement? This retirement is actually for a longer term. So you are looking at regular investing. So the strategy is different. You see the strategy for this short-term can be sometimes like a lump sum kind of investing strategy, but for the long term, I usually go for regular investing, meaning that every month when I have the extra money, instead of putting the extra money into the bank for savings, I put it in the stock market now. Because the bank will not give me high interest. The bank can only give me 1.5% of interest, which is like nothing. Okay, so I have to put it in the stock market. So now of course I can't see much gain, but then in the future I will see gain. Okay, so I must have that kind of a confidence. So then I will invest in the stock market for long term on a regular basis, on a monthly basis. So every month end or beginning of the month where you receive your paycheck, okay, the first thing you buy share first. Okay, you don't pay your whatever utility bill, whatever, you buy share first. Okay, that's a form of an investment and a form of a savings. Then after that, then you pay all your money daily expenses. So you're looking at long-term investing, okay, and savings as well. So for this strategy, every month end you invest. For example, this month I invest in technology. Then maybe in August month, beginning of the month, when I got my paycheck, I invest in some healthcare stocks. And then the next month, following month, I invest in the banking. And then each month I alternate. Okay, I only buy one sector for each month. Okay, so that I want to keep myself, like I don't want to overexpose too much in one sector. Okay. Like maybe 500 ringgit or 800 ringgit or even 1,000 ringgit. So it depends on your ability and your budget. Okay, or if you want, you can save it until 3 months. Okay, every 3 months, then with that amount, you can invest. So you invest every 3 months. So you make it like a habit. Okay, which are the months that you can invest? There are a few months that I recommend, okay, based on my study and my research. There are a few months that the market usually go through a low cycle, and the low cycle months are, so I hope to give you as much information in this 1 hour as possible. So the low cycle months are February, May, August, and November. So we are now in July, so we don't invest in July. We invest in August. Okay, so when 1st of August, you receive some money, paycheck, then you invest in some of the stocks here. Okay, the stocks that you have identified. So this is like a plan to you. So everything's all written down in a nice plan. It's called your investment plan. So you have to write down very specifically what is your financial goal, and then what is your time horizon, how many years you want to reach that goal, how much money you want to reach that goal, and then how much money you want to invest every month or every 3 months or whatever. What is your investment injection, your capital injection? How frequent is your capital injection? And then after that, that one is the beginning part. Then after that, you have to write about your sectors. Okay, which sectors you want to select. So you select aggressive one, then you select the worst hit sectors, and then the growth sectors. Hopefully these will all increase, double up in value. Hopefully, no guarantee, but hopefully. Then only you identify the stocks, individual stocks. Okay. Now when it comes to individual stocks, I do have some recommend. So these are the financial ratios. Maybe you understand some of the financial ratio, maybe you don't, but I'm going to write it down. So if you do not, then you just have to refer to the internet. Okay, nowadays you can get a lot of information from the internet. So the financial ratio, I look at the number 1 is the PE ratio. Okay, the PE ratio, the lower the better, but not too low. Too low also means something is wrong with the industry. About 12 to 14. Okay, 12 to 14 is good. Nowadays, 12 I think is good because it's recession. Number 2, dividend yield. I would prefer 4% and above. Okay, number 3, debt equity ratio. Debt to equity ratio. Now this debt to equity ratio is how much debt a company has, not more than 0.5. Then number 4, ROE, return on equity, at least 12%. And then number 5, the market capitalization. That means how large or how big is a company based on their market price times the number of outstanding share. So the market cap, I would prefer mid cap to large cap. Okay, not too small cap. So above 500 million market cap. Okay, and number 6, the cash reserve. The cash reserve, I want to see that it is above 10% of the market cap. 10%. That means if let's say the market cap is 1 billion, I want to see that this company has a cash reserve of 100 million. Okay, so then that means it's kind of like a safe company with abundance of liquidity, and then it can go through the down cycle and things like that. Okay, so after you have select these stocks based on these criteria, then you have to record. Okay, you put it in a nice Excel worksheet, and then you put that as your portfolio, short-term portfolio. Give a name for that portfolio, whatever name. Then you monitor it. Whenever you receive dividend, you just put it in the Excel worksheet, and then because the dividend is considered part of your revenue, okay, you have to record it. So all this, you do a proper recording. I'm sure ladies are very good in doing this kind of a detailed job, very systematic job. Okay, so you record it down, and then you will have to monitor your performance. Okay, and the performance monitoring, usually I would think it's about every month I will monitor, and then if let's say you do not have that time, maybe every 3 months. Okay, so for me, I prefer every month. And hopefully by this target 2020, 2023, and then if let's say you reach your target, then of course you can go for your holiday. Okay, and then for your long term, it will be 10 years later. Then 10 years later, you see whether this effort of savings will it help you to reach your retirement goal even faster. Okay, so I think okay, that's about it. For this 1 hour, I think I have covered quite a bit. So hopefully everyone will have a strong knowledge about the approach in how to get started in investing, okay, by having a systematic plan. And I think that's about it. That's all. Thank you everyone.
Welcome to the first virtual BURSA Marketplace Fair. We are glad to have you here. Please watch this short walkthrough video on how to navigate the virtual platform. You are now in the virtual event lobby, where you can navigate to any part of the event. Here, we have our virtual exhibition hall with a lineup of all our exhibitors. This is our agenda for the day. Be sure to attend the sessions you're interested in. Our conference hall pages, where you can navigate across pages or ask questions. Our speaker page with the lineup of all our distinguished speakers. Our event survey page. Be sure to fill this up during or after the event. And here is our giveaway room, where you will be able to win amazing prizes through the giveaway and tournament. For the giveaway, just complete 2 mandatory tasks and a combination of 2 of the additional tasks to stand a chance to win. For the tournament, participate in all the 7 quizzes and stand a chance of winning 500 ringgit, 300 ringgit, or 200 ringgit. Let's return back to the exhibitors. Here, you can chat, video call, or meet up with our exhibitors. Below, you will find all the relevant information from about to contact details and their wide range of resources. To participate in the chat, please click on the chat button. This will send a request to the exhibitors to accept your chat. Once the chat has been accepted, it will appear in your direct messages, where you can chat, have a one-on-one video call, and get the representative's details. In your briefcase, you will find all your bookmarked resources and the contact details that you have saved. Be sure to always look at our announcements for the latest happenings. We hope you have a wonderful event. Welcome to the first virtual BURSA Marketplace Fair. We are glad to have you here. Please watch this short walkthrough video on how to navigate the virtual platform. You are now in the virtual event lobby, where you can navigate to any part of the event. Here, we have our virtual exhibition hall with a lineup of all our exhibitors. This is our agenda for the day. Be sure to attend the sessions you're interested in. Our conference hall pages, where you can navigate across pages or ask questions.
Ladies and gentlemen, good evening. Wherever you may be, I trust you are safe and sound in the comfort of your home. As many of you are aware, earlier today we had some technical difficulties during the launch of our inaugural virtual BURSA Marketplace Fair. I would like to sincerely apologize for the inconvenience it must have caused you all. Let me assure you that we will be doing a thorough post-mortem review to determine the cause of the problem and to ensure that this will not happen again in the future. It took a while to sort out the technical glitch, but I am glad that we were able to provide alternative means of access, as many of you were able to view the speaker sessions on YouTube. And by midday, the speaker sessions were also made available on our FB Live channel. I very much appreciate that all of you had blocked your precious weekend time to attend this fair, and that I know how frustrating it must have been not to be able to get into the virtual conference. So thank you very much for your patience and for participating in today's event. And again, please accept our sincere apologies for this morning's technical problem. Ladies and gentlemen, I would also like to express my thanks and gratitude to our distinguished speakers and business leaders for the insights you shared, including plans to make the corporate journey toward economic normalcy. I would also like to thank all our industry partners, participating organizations and exhibitors for your unwavering support and contribution towards the success of this virtual investment fair. Please accept my sincere apologies for the delay and the problems caused by the technical problem. Ladies and gentlemen, notwithstanding the difficulties today, we are extremely encouraged by the number of Malaysians who visited our fair throughout the day, which numbered more than 7,000 participants. Improving financial literacy has long been a key focus area for BURSA Malaysia. So we truly hope we've managed to bring this to you throughout the course of the event. We have observed that more Malaysians are taking responsibility for their financial needs. Retail investors today are generally much savvier compared to a decade ago. We have noted that retail investors are taking a keen interest to learn more about investing. This can be seen by the strong participant registrations on our digital platforms. The BURSA Marketplace platform has seen an increase of registered users of more than 873,000 since its inception in 2014, with 26% of new registrations occurring just over the last 2 years. Our Mirror and Trade platform has registered over 50,000 users since its launch in late 2019. Ladies and gentlemen, the shift in how we save and invest will have a very significant effect on our economy, the market, and society at large. Investors need to understand equities trading from a fundamental and technical perspective and trade in an informed manner. Undertaking proper research and assessment is crucial for you to invest in an instrument that matches your risk appetite and investment goals. By bringing the right knowledge and tools to you, we hope to impart the idea that investing in the capital market can be a viable way to grow your wealth and achieve your financial goals. The thought of entering the stock market need not be intimidating, especially if you have all the relevant information. However, you do need to choose your investment products objectively, assess the risks rationally, and plan for your financial future wisely. Further, the COVID-19 pandemic has taught us that saving early and having a long-term investment plan is not only smart and sound, but it is necessary. Therefore, I strongly encourage all investors, especially those who are new, to make full use of our educational platforms, which are free for all to use. We intend to provide you with more channels, webinars, and service enhancements to complement your investment journey, so do stay tuned to BURSA Marketplace. Ladies and gentlemen, I would like to end by sharing that all the talks today have been recorded and they will be made available online. We will send you details on how to access the recordings so that you can catch and listen to the talks at your convenience. So please continue to stay online for a little while longer, as right after this, we will be announcing our third and final lucky draw giveaway, as well as the winners of our tournament. Once again, please accept our sincere apologies for today's shortcomings. And thank you very much to everyone for continuing to trust BURSA Malaysia. Stay safe and have a great weekend. Thank you.